So now let's begin PGBP problem solving, okay, directly from the CMA Inter study material. Now, I hope every one of you have watched at least my marathon of income tax, which I predominantly did based on CA. And in every topic, if an alternative assumption is used in CMA material, that also I reminded as a part of the marathon. And any of our students who already purchased our income tax classes as a part of group wise model or subject wise model, okay, so for you also, primarily you might have solved originally CA Institute problems, now CMA study material problems. Now, as I always tell at the beginning of every chapter in CMA study material, the problems are very, very advanced. Don't expect this level in your exams, but this will give you definitely a very good amount of knowledge. Okay, fine. So directly in the PGBP, the first section where problem starts is section 32, depreciation. Now you see, on depreciation you have so many problems. In CA Inter also we will not have these many problems. They test very rigorously the concept. In CMA, the one advantage, one advantage is they test concept to the core. Okay, fine. Now let's illustration number 65. This is nothing but continuation. They use continuation for all heads of income. It's a continuation. Okay, so Miss Anita Enterprises, I'm starting. Okay, has a written down value in furniture block. We all know furniture is carrying 10% rate of depreciation. That block is. Now what is its opening value on 1/4/2025? Remember, you know, for June 26 exam, December 26 exam, which assessment year is applicable? 26-27. Which previous year is applicable? 25-26. Simple. When you're writing this exam, March 31st, which is completed? March 31st, 2026 is completed, which means the financial year will be 25-26. Assessment year will be 26-27. So here they have given information belonging to 25-26 financial year. Opening value, they said. How much is the opening value? 80,000 rupees. Now the block consists of how many furnitures? Opening value of the furniture were furniture X and furniture Y, means 2 units per there. Okay, fine. Now case number A, furniture X is sold for 20,000 on 1st May 2025. 1 minute. Yeah, look at. So what is opening WDV? 80,000, correct? Now we know the format. Additions during the year 0 minus amount received. Part of a block is sold. Remember, opening has 2 furniture items. Now we sold only 1, which means part of a block is only sold. Amount received on part of a block transfer, how much it is? 30,000, correct? What is the amount received on part of a block sold? What is the sale value of the furniture? Oh, 20. So how much is that? 20,000. Now what is the WDV on 31st March 2026? 60,000 is the WDV, correct? Now this is before depreciation. Now when you want to calculate depreciation, in our concept class we understood section 32, when we have to apply section 32, 2 conditions has to be satisfied. Condition 1, there must be at least 1 asset in the block as on 31st March. Right now, okay, as on 31st March, out of 2, 1 machinery is sold, 1 furniture is sold, still 1 asset is there. So condition 1 satisfied. Condition 2, there must be positive written down value. Yes, written down value is positive. Since both the conditions are satisfied, we can calculate depreciation. Now I will calculate depreciation minus depreciation, working note number 1. How much is the depreciation? 60,000 rupees. First I will allocate to less than 180 days purchase. But we don't have, in this question, case number A, we don't have purchase information, therefore 0. Then every other amount has to be allocated for balancing figure, which is chargeable to depreciation at full rate. For furniture, what is the full rate of depreciation? 10%. Therefore, depreciation is how much? 6,000. So therefore, the depreciation is 6,000. That's it. Easy. Now look at the answer given for first question. For case A, how much is the depreciation? You see here, 6,000. Correct? Next, case number B. Same furniture X sold for 1 lakh on 1st January 2026. Remember, within the same year it was sold. Now look at here in the case number B, it is sold for how much price? 1 lakh. It is sold for how much price? 1 lakh. Now the value is becoming negative. Condition 1. One furniture item is there still as on 31st March, but the value is becoming negative. You cannot apply section 32. When you cannot apply section 32 for a block, you have to apply capital gains provision section 50. Correct? Now as per that, format has to be reversed. First amount received how much? 1 lakh. Minus opening value how much? 80k. Minus any other purchases made during the year? 0. In case B, there is no purchase information given. Therefore, 20,000 is short-term capital gain. Am I right? Same. I'm not applying any different logic from what we discussed in the class. You see the marathon, the same point I told. You see the class, the same point, same logic I used. Therefore, for case number B, depreciation is nil, but the short-term capital gain is 20,000. Correct? Next, case number C. Same, furniture X is sold for 1 lakh, but they purchased another furniture of 35,000 on 1st July 2025. Yes or no? Now again, opening value is how much? By the way, tell me. Opening value is 80,000. They purchased additional item in the block 35,000. Minus one furniture item is sold for how much? 1 lakh. Are you clear? By the way, this is opening 2 missions. This is 1 mission. That too, it is purchased and used for more than 180 days. You see purchase date. Say was 1st July or 7th July, something. July 2025. Which any asset purchased on or before 4th October. Before 4th October, if at all they purchased. Here installation date is not given. When installation date is not given, purchase date itself is installation date. When installation date is not given, this is the logic we take. So, since it is purchased in July, it is used in the current year for more than 180 days. So therefore, first of all, tell me opening plus purchases. Gross block value how much? 1,15,000. Am I right? Minus amount received on part of a block, because furniture X is sold. Yes or no? 1 lakh. Therefore, WDV value 15. Now you see Y mission is there, S mission, 2 missions we have. Value is positive. Therefore, we can calculate depreciation. So how to calculate depreciation? 15,000. I will allocate this 15,000. I will allocate this 15,000 into less than 180, 0. Balancing figure 15,000, which is tax, which is depreciable at 10%. So 1500 is the depreciation. The answer. Am I right? Case number C, 1500. Hello? Yes. Next. Case number D. Furniture X sold for 10,000. Furniture S purchased for 40,000 as on 1st July. Same information, sale value changed. Am I right? Same information, sale value changed. So purchase value how much? Opening 80. Purchase value 35. So gross block value 1,15,000 minus amount received is just 10,000. Correct? So WDV value 1,05,000. Value is positive. Part of a block is still existing as on 31st March. Therefore, I will claim depreciation less than 180 days, 0. Balancing figure 1,05,000, which is depreciable at 10%. So depreciation is how much? 10,500. Able to get it? The same logic. Yes or no? So what is the depreciation amount? 11,000. Purchase value, 40. Here I have taken wrong information. Here it is 40, you see. Here it is 40. This we made a mistake. Information capturing mistake. 1,20,000. 1,10,000. Correct? 1,10,000. 1,10,000. Therefore, 11,000 is the answer. Correct? That's it. Next. Just a minute. Yeah. So 1,10,000. Understood? Am I right? Again you see furniture X sold for 10,000. Again yes, purchased for 40. Same information, but look at the date, 11th November. Means here new machinery is purchased on or after 4th October. Means the new furniture, sorry, I'm getting machinery. The new furniture was used for less than 180 days. So this we need to be very careful. Less than 180 days, it will carry half rate. Yes or no? So now look at opening value 80. Purchases 40. Correct? Purchases 40. Remember, this is for less than 180. So total gross block value 1,20,000. Sale value 10,000. Am I right? Part of a block? Yes. Look at 1,10,000 is WDV before depreciation. Now look at, split into two parts. Now less than 180 days. How much value is there? 10,000. Balancing figure how much? 1 lakh. Oh, sorry. Yeah, very good. Less than 180 days, how much is the value? 40,000. Balancing figure 1 lakh. Sorry, balancing figure will be 70,000. Am I right? It's an out of 1 lakh 10. Now this is depreciable at 5%, whereas this is depreciable at 10. So depreciation 5% means 40 into 4, 2,000. Correct? This is 7,000. So total depreciation is how much? 9,000. Look at the answer. Correct? Case number E. 9,000 is the depreciation. Correct? Yes or no? Everywhere. Next. Furniture X. Case number F. It is sold for 2 lakh. Whereas furniture S purchased for 40 on 11th November only. Same. But sale value is 2 lakhs. Now you see. Again. Opening value 80. Purchase during the year 40. Gross block value 1,20,000. But you see, part of a block is only sold. As on 31st March, still furniture is there, but value is becoming negative. Depreciation you can't claim. Therefore, you will compute short-term capital gain, which is 80,000 rupees. Am I right? Below the answer given correctly. 80,000 rupees short-term capital gain. Yes or no? That's it. Next. Can I proceed further? G. Both furniture X, furniture Y, both are sold for 10,000 and 35,000 respectively, which means both the furniture is sold put together how much? 45. And if you see, opening value has only these two. Opening has only two furniture. Before closing date, as on 31st March, two furnitures were sold. Entire block is sold. As on 31st March, there is no block. You can't calculate depreciation. Again, you have to calculate capital gain or capital loss. Tell me, what is the opening value? 80,000. Both the furniture put together sold for 45. Or 80,000 worth I sold for 45. Therefore, 35,000 is short-term capital loss. Am I right? When full block is sold, sale value 45 minus opening value plus purchases 80 is equal to 35,000 loss, short-term capital loss. On depreciable assets, the gain or loss is always short-term. Correct or not? So look at the answer below. 35,000 short-term capital loss. That's it. Next. Furniture X and furniture Y both put together we sold for how much ma? 45,000. We sold it for 45 on 11th November. When they sold doesn't matter. When it comes to sale doesn't matter. Date. New furniture T purchased for 5,000 on 1st July. Okay, so which means block is there. Be careful. So now again we have to compute. Opening value how much first of all? 80. New machinery T we purchased. What is the price of that machine? 5,000. Correct? So therefore gross block value is how much? 85. Two machineries in this block. Now this block has three machines, but only two machines were sold. Put together for 45,000. Am I right? Yes or no? Therefore, what is the written down value? 40. By the way, this 5,000 worth of T machine we purchased, no? Which month? July. Ayyo, which means more than or equal to 180 days. That's it. Therefore, 40,000. Now, is there any less than 180 day purchase? 0. Therefore, what is the balancing figure here? 40,000. On this rate of depreciation, 10. Therefore, depreciation is 4,000. See the answer? Matching? That's it. 4,000. Next. Can I proceed further? Case number I. Furniture Z purchased for 40,000 on 1st July 2025, but it was put to use on 11th November 2025. Okay, usage date is given. Now anyhow, first opening value how much ma? Opening value how much? 80. Usage date is only relevant. 1st November it was used, which means less than 180. How much is that value? Purchase value 40,000. That's it. So what is the gross block value? 1,20,000. in that particular case, did they give sale value? They have not given. Therefore, written down value is how much? 1,20,000. Now, depreciation less than 180 days usage. How much is that? 40,000. Balancing figure, how much is that? 80,000, which is 5%, which is 10% is equal to 2k is equal to 8k. Total depreciation 10k. Look at the answer. Perfect. That's it. Next. So case number I, the answer is 10,000. Correct answer. Just cross check. Case number I. Case number I, 10,000. Okay. Next. Furniture queue purchased for 50 on 1st July but put to use on 1st November 26. What is the observation here? It is put to use in the next financial year. It is purchased in 25-26 year, but it was used in 26-27 year. In the current year, it is not used. Okay, fine. Look at. So, what is the opening value? What is the opening value, ma? 80,000. Purchase how much? Purchase. 50. Okay, fine. Purchase. So, what is the gross block value? This is only addition, ma. This is only addition. Okay. I'm not talking about usage. So, what is the gross block value? 1,30,000. Minus, is there any part of a block sold? No. Therefore, what is the written down value? 1,30,000. Now, when I'm allocating, before more than 180, less than 180, I should first allocate to assets which are purchased during the year but not used. You see our format of depreciation? Asset purchased but not used. First you should allocate for that. Then you should allocate asset purchased and used for less than 180. Then balancing figure. First, assets not used. How much is the asset? 50,000. In the 25-26 year, it is not used because it is used only from 1st November. Yes or no? So, and balancing figure is 80,000. Yes or no? When asset is not used, 0 depreciation. Correct? 80. Whereas this is 10%. So, depreciation amount is 8,000. Look at the answer. 8,000 correct? That's it. Next. Case number K. Furniture are purchased for 30,000 on 1st November 2024. Oh my God, last year it was. But put to use on 11th November 2025. Guess what? Here we are taking opening WDV of the block 80,000, right? In this 30,000 would have already been included. You should not take this because this last year purchase, so it is already there in the block. Depreciation last year we didn't calculate. In the current year opening block 80, this would have been already been there in the opening value. This information is irrelevant now. But this year we used it for less than 180 days. That doesn't matter. Because the moment an asset comes in the opening value, it directly comes, because no, you see, less than 180 means what? Asset purchased during the year and used for less than 180 days. Then only in the current year you will get. The moment an asset is brought and it is carry forwarded to next year, it is always eligible for full depreciation. So opening value 80, this are purchased for last year 30,000. No, this we will ignore. 80,000 opening value into 10% straight away this year. How much is the depreciation? 8,000. 8,000. Am I right? 80,000 opening value, right? You see, opening value is equal to how much more? 80,000 plus purchases. This year I didn't purchase anything. 0. Last year 24-25 it was purchased. Therefore, gross block value 80. Now minus amount received, part of a block transferred, nothing. So WDV value 80. Yes or no? Now on this, is there any asset which is purchased and used for less than 180? 0. Is there any asset purchased but not used at all? 0. Balancing figure 80,000 into 10% is equal to 8,000. That's it. What's the depreciation? Did they give some other information? Case number K, na? Case number K. What is the depreciation? Case number J only, yeah? K, na? This they should not add. This we take an assumption that it was added as a part of last year block. That is the right answer. This is not right answer. Because whenever we purchase the a particular asset, we add it in the block. Able to understand? Here there are two alternatives. Here there are two. See, if I'll open depreciation provision and then show you, as per the Act Institute, what they did is right. Okay, I'll show you once. Look at. Let us apply the letter of the law and then see. Now 25, then 41, 43. 43 section talks about block of asset format. Okay, that is important for us. Block of asset format is there under 43. Subsection 6 that actually talks about return on value meaning. Yeah, what is return on value means? In case of asset acquired during the previous year, then actual cost to the SSA. In case asset acquired before the previous year, the actual cost to the SSA is depreciation actually allowed to be under this act or any other act. Okay, provided that while determining return on value, depreciation allowed shall not include depreciation allowed under section 10. That's different one. In case of any block of asset in respect of any previous commencing on or after 1998, aggregate of return on value of all assets falling in that block at the beginning of the year adjusted by increase by actual cost of any asset falling in that block acquired during the previous year. In the year it should be acquired. Fine, we'll see. By the reduction of money payable in respect of, that's it, asset acquired only. Acquired and used they didn't say. Only when I acquire during there I'll add it in the block. But if I do not use it in this year, I will not claim depreciation. Now in the given question, wait, okay, this is for that year. Okay, I will see this one, not that one. In respect of any year relevant on or after 1st day 1989, the return on value of the block of asset in the immediate previous year as reduced by depreciation actually in that block in the said year and adjusted by increase or reduction referred to in item number 1 not being increased on account of acquisition. That's okay, fine. And any reduction amount equal to goodwill, that's okay, fine. Fine, correct only. Our interpretation is absolutely correct. So whether it is used or not, here you see asset acquired, that's enough. Usage not matter to add in the block. Now this means this 30,000 rupees purchase, it is purchased in last year 24-25. It is added in the block. So opening value is assumed to be inclusive of that. So this answer is technically wrong. This answer is technically wrong. Okay, fine. We'll see. We'll take an understanding. If at all remaining questions also similar point only they considered, nah, then for the CMA purpose, we follow this logic. Are you clear? Next. Right now we completed which one? Case number K, na? Yeah. Next. L. Furniture, yes, purchased for 10,000 on 1st July 25, but put to use on 11th November. Whereas X and Y were sold for 10,000, 6,000. Alright, this is easy only. Again, opening value how much? By the opening value how much, ma? 80,000. Correct? Now, purchased during the year, but used only from November onwards, which means less than 180 days. What is the value? 10,000. What is the gross block value? 90,000. Now X and Y, part of the block has been sold, both put together how much? Both put together 16,000. Correct? 16,000. Okay, 16,000. Now what is the WDV value? 74,000. Am I right? Now I will allocate less than 180 days. How much is the less than 180 days? 10,000. Balancing figure how much? 64,000. This is 5%, this is 10%. 500, 6,400. How much is the answer? 6,900. Look at the answer given. 6,900, correct? That's it. Okay. Next. M, correct? Next one. Furniture are purchased on 30,000 on 1st July and sold the same for 40,000 on 11th November. You know what? Once the same asset purchased and sold, that doesn't matter. When it's purchased, add in the block. When it is sold, part of a block is sold. See, remember I told you in income tax, depreciation is not asset wise, it's block wise. Once an asset is purchased and added in the block, it loses its identity. Later on, if the same asset is sold, we don't call it as furniture or is sold. We call it as part of a block of furniture is sold. Am I right? Fine. First, let's understand. Let's first look at what is the opening value? 80. Now, what is the asset purchased and used for more than 180? No? When it is installed, actually, okay, it's actually used for less than 180. It's used for less than 180 because less than 180 days. Because no, it was put to use on July. Oh, no. It was purchased on 1st July. Installation date they didn't give, the same date. Furniture are, but it is sold on 11th November, which means July 1st onwards to 11th November. What is the gap? Less than 180 days. So it is used for less than 180 days in the current year. Correct? See, generally, if the same machine is not sold, then we compute up to 31st March and say more than 180. But here same machine is sold. Therefore, that machine is used for less than 180 days during the year. What is the value? Arma, furniture Arma, 30,000. Case number M. That's why when put to use is not given, we assume purchase date is put to use. No, 1st July to 11th November. How come it is 180? 1st July it was purchased. I assume that on 1st July it is put to use. July 31, August 31, September 30, October 31, November 11 days. It is used for 134 days only. So I assume that it is less than 180. Not even assumption, it is clear. Yes or no? This machine which is acquired during the year but used for less than 180. How much is the value, by the way? 35,000, correct? What is the gross block value? 1,15,000. 35,000, correct only? 30, 30, sorry. I'm sorry. It is 30,000. Okay, minus at what price it is sold? Part of a block only sold. Am I right? Because once it is added in the block, it is not R, it is furniture. Now part of a furniture is sold for 40,000. Therefore, what is the written down value? 75,000. Now in that, less than 180 days, how much it is? 40, no? 1 okay. 1 lakh 10, 40. Sorry, 70, correct? Now, less than 180 is 30. Balancing figure 40. This is taxable at, this is depreciable at 5%, this is depreciable at 10. Here it is 1500, here it is 4000. Therefore, total depreciation 5500. What is the answer given? What is the answer given? Which number? Case number K? M. Case number M. They gave 7000. Actually, okay, they might have taken the same logic because information is completely accurately available. Since information is accurately available, that machine is only sold, right? Entire value they allocated for opening itself. In this year, since information is clearly available, so new machine was purchased and new machine only sold. No, that logic is not correct. That logic is not correct. We should allocation should be always the same. Less than 180 days, we should calculate depreciation for that, and balance figure will be calculated for opening. Once an asset is purchased, it is now, this is the block value. Now part of a block is sold, 70. Out of that 70, I'll allocate 30,000 for the asset purchased and used during the year for less than 180. Balance will allocate for opening. Yes or no? And therefore the depreciation value will be 5,500, which is correct according to me. This is the correct logic. Able to understand? See, but actually regarding this, information is not clear. But you can take another assumption also. Same machinery is purchased and same is sold. Okay, you reduce 40 from block 70. This 70,000 is not belonging to R. That we know that. This 70,000 is not belonging to R. It is belonging to X and Y, which are opening only. You can directly apply 10%, which is again 7,000. This logic is also correct only. Logically, this is only correct answer. But theoretically, how should we compute? This is way we have to compute theoretically as per the concept given. Okay, at some cases they have taken logical answer, at some cases they have taken theoretical answer. Okay, fine. So this case number M, where we got where we did wrong actually, one is case number M, yes or no? And another one where we did wrong, which one? Case number K. Case number K. These two, the answer was bit different from routine logic. Okay, so in CMA material, what they did is, even if the asset was purchased last year, it will be added to block in the current year when it was actually used. That's the logic which they did. Yes or no? So again, another case what we understood, if same machine is purchased or same asset is purchased and sold in the same year, add in the block, sale value also less in the block. Balance amount fully, it will not be allocated for asset purchased during the year. It will be allocated for remaining assets, and accordingly remaining assets whatever rate applicable, that is it. Again, if you see here, they're solving asset wise. We should follow block wise means block wise. So the approach which they solved in case number M, that approach is wrong, because you're identifying furniture. Or there is no there is no identification for each and every asset in the block. It's the block, that's it. So you're going against the principle again. So M, what they computed is completely not correct, and even K is also not correct completely. Able to understand the logic? Able to understand? Next, again, case number N. Sold furniture X and Y for 95,000 on 1st July, but purchased R for 30,000 on 11th November. Okay, fine. So opening value how much ma? 80. Purchase value 35,000. 30 ah? 30. This is less than 180 days, correct ah? Less than 180. So gross block value 1,10,000 minus sale value of both furniture 95. How much is that? 95. So balance value 15,000 less than 180 days, 15,000. Am I right? 15. Balancing figure 0. Here it is 5%. Therefore depreciation is 750. Right answer. That's it. Next. Oh my god. Case number O. Now in CMA material, tell me, whenever they put to use, in that year only they'll add in the block. That's what we understood from K. Yes or no? Here you see, this is a new question completely. Okay, one furniture X item was sold for 90, correct now? Which was, I mean, the sale value doesn't matter, and the following furniture was put to use, means purchases. Purchase in the current year, purchase in current year, purchase in current year, purchase in current year. Am I right? Yes or no? Okay. They were usage dates. Sorry. Usage dates. Here, purchase in, I mean, user also, purchase date also current year, purchase date current year, purchase date last year, purchase date last year. Here you see, usage date next year, but purchase date current year. All current years are highlighted with orange color. Previous year, next year highlighted with red color. Okay, now let's be careful. Okay, let's compute as per CMA problem. CMA study material logic. First, tell me, what is the opening value? What is opening value? 80,000. Am I right? Purchases. When I'm taking purchases, asset purchased during the year, used during the year, only that has to be capitalized. Suppose I just purchased, I didn't use it in the current year, I will not add in the block. Case scenario that only 24-25 they purchased, but they used in the current year, they added in the current year block as per CMA material logic. As per CMA material, this answer is not correct. As per CA logic, I will add in the block whenever they purchased, but as per CMA institute material logic, whenever they used, that year I will add it. Am I right or not? Now look at, both are in the same year, so can I add in the block? What is that furniture name ma? X a Y a? A. Am I right? Next one, both are in the same year. How much is the value? 50,000. Hello, this is furniture B. Then furniture Z. Oh, it was purchased in last year but used in the current year. But we will always add in the block based on usage date, not based on purchase date. Am I right? Usage in the current year, no. 60,000 I will add. Yes or no? 60,000 I will add. This is more than 180 days. This is Z. Whereas 30, 40, 30, 50, 30 used on 18th December, which means less than 180 days. Yes or no? More than or equal to 180, this one. Yeah. Whereas this one, oh, 18th February, this is also less than. Do you understand? Yes or no? Next. Oh, again another one. Usage in the current year. It was used in current year. When it is used as a part of current year, opening, closing, I mean less than 180, more than 180 logic will go off. Because asset was purchased last year, but put to use in the current year for less than 180. But that doesn't matter. If an asset is purchased last year and added in the block in the used in the year, used in the current year, we directly treat it as opening value. I mean, I don't know what logic they followed here. I'm little skeptical. Okay, but CMA material they are adding in the block based on usage rate. So here it is used for again less than 180. I will take less than 180 days logic usage. How much is that? 10,000. Correct? Am I right? Less than 180 days. Am I right? Used. Next, furniture queue used on 1st April 2026. We are doing for 25-26. It is used in 2026 year. I'll ignore it. Am I right? Now let's look at gross block value. How much is the gross? 80 plus 30, 110. 110 plus 50, 160, 220, 2 lakh 30. Now sale value is there. Part of a block is sold. Part of a block is sold at the beginning itself. They gave 90,000. Yes or no? 90. So what is the WDV of the block? 1,40,000. Correct? Huh? Now this 1,40,000 I will allocate for less than 180. Less than 180. Oh my god, this much is there. 80 plus 10, 90. Less than 180. How much is there? 90. Yes or no? More than or equal to 180. Balancing figure 50. This is tax. This is depreciable at 10%. This is depreciable at 5%. 4,500. This is 5,000. Total depreciation 9,500. Am I right? Look at the answer which they gave. Again, not matching. Probably another 500 is answer. 10,000 answer. 10,000 only answer. Yeah, I understood. Now here, this point I kept P. Here, that logic they applied. Which logic they applied? Yes, at purchase last year. Did not use in the last year. In the current year, it is used. In the current year, how many days it is used, it doesn't matter. It is treated as if it is used for full year. Less than 180 days logic is applicable only for the first year of purchase. You might have understood normal depreciation. The same logic will not apply for additional depreciation. They are mixing two logics. When it comes as a part of opening, this logic is correct. That's why I said K and O. This K and O, this is clearly wrong answer. K and O are clearly wrong answers. Are you clear? Whereas M, it's partly wrong answer. It is also not right answer. At the same time, I won't say it is wrong also. It's not right, not wrong, partly right. Whereas K is clearly wrong, O is also clearly wrong. But in CA, how we solve this problem, you know? Purchase date is relevant for adding in the block. Usage date is relevant for computing depreciation. Next date will be part of opening. That time, whether used in that year, that date is information is irrelevant because it's already part of opening. It is automatically eligible for full depreciation. Able to understand. That's it. So I tell you K and O, ignore it. So now how they solved in K? This 10,000 is there, right? This is purchased last year, but put to use in the current year. In current year, how many days it was used? Doesn't matter for you. We assume it as deemed to be more than 180. So therefore, that time it will be how much it is? Less than 180 means 80. Correct? So this will be 60. I'm right. Yes or no? So 10% is 6,000. This is 5% means 4,000. Therefore, the answer is 10,000. That's how they computed, which is again wrong. Why? Last year when you purchased, this year you're adding in the block in the current year. When you're adding in the block current year with 11th November date, it is less than 180 days. Depreciation compression you're applying wrong here. You're considering it as part of opening, right? Then you should not add in the current year block. No? You should have added in the last year block itself, right? So that mistake is there. With this normal depreciation computation, we understood thoroughly, clear. I think you can understand. You can calculate depreciation in any way it is given. Last year it was purchased, current year it was used. In CA, purchase date is relevant for adding in the block. And when you are calculating depreciation, first allocate the value for asset purchased during the year but not used. Allocate the value. Then use it for less than 180. Then balancing figure. Not used, 0. Less than 180, half rate. More than or equal to 180, full rate. I mean balancing figure, full rate. That's it. Whereas in CMA material, purchase date is not relevant. usage date is relevant. Now for O point, no, did they give breakup? O, yeah, you see, opening value they gave, yes or no? Gross block value 2,30,000. So which means this asset which is purchased during the year 20,000 but used in the next year, this was not added in the block. But in CA material, what we take, we add in the block based on purchase date. Act also I showed purchase date is relevant. For adding in the block, WDV value, remember I showed you in the act also, you see here, increased by actual cost of any asset falling in the block acquired during the year. Usage doesn't matter. You acquired, add in the block. But when you're calculating depreciation, based on usage you give. Able to? That's it. That's it. Fantastic question. Only this is tough question here. That's it. Almost we spend 40 minutes only on one problem. But of course, this has so many submodels. Okay, literally how many? A, B, C, D, E, F, G, H, I, J, K, L, M, N, O. 15 problems we did. We did 15 problems on depreciation, typically. That's it. Next. Again, no problem. We can do this. Okay, next question. Question number 66. Can I? Yeah, just 1 minute. In exam, if the same question comes, what you have to do? CMA problems, you write as per this book only. If at all you are reading CA exam, add in the block based on acquisition date. While claiming depreciation less than 180 not used, that you follow our format in CA. For CMA, follow this logic. This much stuff they won't give. First of all, this much stuff in CA exams itself they won't give. In CMA also they won't give. Okay, because this provision is something which is very tricky, which even examiner, paper setter won't understand it. Okay, that's it. Yeah, let's proceed to illustration number 66. Can I? Mr. X, a grower and manufacturer of tea, purchased machinery 15% block on 10th April 2023 for 10 lakhs. He computed depreciation for assessment year 26-27 based on the information given below. Opening WDV as on 1st April 2024 was nil. Okay, this is actually 24 probably. They didn't update the number. Okay, and he purchased on 10th November. Asset purchased during that year, 10 lakhs. Okay, that year. Then less depreciation for that year. Only 40% he reduced depreciation, 60,000. Okay, as is engaged in business of growing, hence 60% is considered as part of agriculture income. Okay, then opening value is 9,40,000. 9,40,000. They computed depreciation like this, which is wrong actually. See, fine. Let me first calculate depreciation, ignoring the agriculture T concept. Okay, fine. What is the opening value for 24-25? Opening value 0. In that year, on 10th April 2024, I'm talking about last year. Okay, 10th April 2024, which is considered as more than or equal to 180. He purchased machinery for 10 lakhs. What is the gross block value? 10 lakh. In that year, is there any amount received on part of a block? 0. What is the written down value as on 31st March 2025? 10 lakh minus depreciation. Here, when SSC is engaged in composite income, agriculture and non-agriculture, both are there. Depreciation you reduce here full. In the block, you should reduce depreciation always full value. Whereas how much you will claim in income tax? Only taxable portion related depreciation. Fine. Here 10 lakhs into, can I say 15% full rate? So how much is the depreciation? 1.5 lakh. How much is the closing value? WDV as on 31st March 2025 after depreciation 8.5 lakh. But how much deduction you will claim here? 1.5 lakh is depreciation. But I will not claim 1.5 lakh under section 32. I will claim only 60% is agricultural income, right? 60% of the depreciation I will allocate to exempted portion. Only 40% I will allocate to taxable portion. Okay, 60,000 only I will claim. How much I will claim is 60, but how much I will reduce in the block is full depreciation, because in block I am reducing amount because it is depreciated. I am claiming under section 32 deduction because this point we considered, we discussed in our classroom. We have in the last pages, the last of depreciation topic, it is there. Able to. Now look at the theory which is given, where income of an SSE is partly from agriculture and partly from business, which is chargeable to tax. Okay, for computing written down value of the asset acquired, the total amount of depreciation will be computed as if the entire income is derived from business. Compute depreciation as if it is fully taxable source. Okay, yes or no? And the depreciation so computed shall be deemed to be depreciation actually allowed under this act. We assume this entire 1.5 lakh, you know what SSC actually did? 1,50,000, but only 40% only he claimed. The mission is used for agriculture purpose also. Now, if at all this depreciation amount is only taxable portion he reduced, non-taxable portion is not reducing, lifetime is getting so much benefit. Yes or no? So first reduce full depreciation, but how much you will claim deduction for income tax purpose computed in PGBP income? 60,000 only you will claim. Next opening WDV how much ma? 7,22,000. That's it. Now tell me how much is the this is 7,22,000. I mean sorry, this is 8,50,000 for the current year, correct? Now depreciation for the year how much it is? 15%, 1,27,500. Now look at the income. Further, compute his business income, assuming his income before depreciation is 8 lakhs. What is his income before depreciation? 8 lakhs. Okay, minus 1,27,000 current year depreciation. Then balance income on this 40% is PGBP, 60% is T related income. Rule number 8. That's it. Are you clear? A similar problem we did similar problem in our total income topic, or somewhere we did. Able to understand in our MRP discussion in our course. Okay, that's it. Now additional depreciation point. Again this is another torture. Okay, fine. Shall I compute? Tell me, additional depreciation is eligible only for manufacturing or SSE engaged in printing and publishing business also. So only they get additional depreciation. When you will get additional depreciation, you must acquire in the current year, or at least it must be put to use in the current year. Usage is most important. If it is used for more than 180 days in the current year, more than or equal to 180, 20% of the actual cost. If it is used for less than 180, 10% of the actual cost, balanced in the next year. Suppose asset is purchased this year but not used this year. Next year we used it. Next year, is it used for more than 180? Check out. If so, full 20%. If it is next year also used for less than 180, then that next 10% that year, that next year again 10%. Look at date of acquisition last year. Yes or no? We are calculating. They are asking newly formed furnished you following compute depreciation allowed for 25, 26 and 26, 27. We are only computing additional depreciation directly. Okay. Now last year it was acquired and date of acquisition they have given. Okay. If usage date is not given, we assume that in the same date it is used. Yes or no? Now 5 lakhs into 20%, right? Rate of depreciation 15 is for normal rate. Additional depreciation is always 20. Therefore 5 lakhs into 20, 1 lakh. Suppose 7th May in the same year I assume it is used, into 20% is equal to 60k, correct? Then 15th December into 10%, so which is 20k in the current year, again 20k in the next year. You see 2020. Yes or no? Next 5th May it is used, 1 lakh into 20%, into 20,000 in the next year. Total depreciation additional is this much. Easy, not a big deal. Now they are asking calculation of depreciation under 32 for both the years. Okay, they are adding, they are doing total block value, they are doing total information like 24-25 they purchased how much machines? Totally 10 lakh. Am I right? Opening is 0. Purchases during that year is 10 lakh. Look at, so opening is how much? Opening is 0. Purchases during that year is 10 lakh. So gross block value 10 lakh minus, is there any amount received on part of a block sale? No. What is again WDV value? 10 lakh. Now part number 1, normal depreciation first I'll compute. So 10 lakh less than or equal to 180 days, 2 lakhs, which is depreciable at 7.5%. Balance 8 lakhs is depreciable at 15%. Am I right? 8 lakhs into 15%, how much 1 lakh 20, 1.2 lakh. Whereas 2 lakhs into 7.5%, 2 lakh into 15, 30, 15,000. Correct? So normal depreciation 1 lakh 35. Additional depreciation we already computed 1,80,000 in that year. So total depreciation 1,35,000 plus additional depreciation 1,80,000. Additional depreciation is 1,80,000. Am I right? Now total depreciation 3,15,000. So now reduces 3.15 lakh. So therefore WDV closing is how much? 6,85,000. Correct? Now this will be opening for next year. Am I right? 6,85,000 is next year opening. Am I right? Plus next year also asset is purchased 1 lakh. Hello? So gross block value 7,85,000. Amount received on part of a block, nothing is sold. Therefore the same itself is written down value minus normal depreciation. Normal depreciation in that year, okay, less than 180. 0. Balancing figure 7,85,000 into 15%. 7,85,000 into 15%. 1 lakh. Sorry. 7,85,000 into 15%. 11,000. 7,85,000 into 15%. 1,17,000. 1,17,750. This is normal. We should also reduce additional depreciation we already computed and kept. How much is additional? 40. So total depreciation you will claim is 1,57,000. So what is the WD value? 7,85,000 minus 1,07,750 minus 40,000 is equal to 6,27,250 is the answer. Correct? That's it. Clear? First what they did is additional depreciation they computed. Then they computed normal depreciation, everything. Clear? Next. So much stuff again. So lengthy. Date of acquisition, date of put to use, so much they gave. That's it. That is one more asset. Okay. Fine. Fine. Shall we do some small things? Take a break and get back. Yeah. Let's now continue 68th question. Okay. This is an industrial undertaking. Okay, which commenced manufacturing activity from 1st September 2025 has acquired following assets during the year. Okay, they purchased assets since they started manufacturing activity on 1st September itself, means business itself started 1st September. You see all the acquisition current year. So acquisition dates are all in current year. Put to use current year, all are in the current year. Put to use also. Okay, now the values are also given. Now what is the question they are asking? Compute the depreciation allowable for the assessment at 26-27 and return on value on 1st April 2026. Now if you see, there are two blocks here. One is factory building, which is depreciable at 10%. The another one, plant and machinery, which is depreciable at 15%. Now if you observe, second hand machinery, no additional depreciation. Am I right? Vehicles, no additional depreciation. AC installed in office, no additional depreciation. Am I right? Rest all eligible for additional depreciation based upon usage date. Correct? Fine. There is no opening value. So I think for plant and machinery, if at all we compute, that's more than enough. And building, you see, 4th April purchased, but 1st September. Still 1st September to 31st March, more than direct solution only. So that's it, the question. So you can claim 10% depreciation. So building depreciation is 5 lakh. Building is not eligible for additional depreciation, whereas these are all eligible for normal and additional. I think no, we don't even have to apply block format. We can directly compute. Okay, so compute allowable depreciation. Fine. Now on this, 15% normal, 20% additional. Am I right? Can I do that directly? Because no, there is no sales, right? So you can directly compute. So now tell me, 2 lakhs into 35% depreciation. 35. Why? 15 normal, 20 additional. So 70,000. Am I right? Now this is 1st September. Again, 5 lakh into 15%. 5 lakh into 20%. Total 35% is equal to 1 lakh 75,000. Then again, 1st September 35. 3.5 lakh. Am I right? Then this one 31st October, remember 31st October means less than 180, so 7.5 additional only 10, which means 17.5 percentage. Am I right or not? 4 lakh into 17.5%, correct? 4 lakh into 17.5%, how much it is? 70k. 3 lakhs again into 17.5%, how much it is? 52,500. Am I right? Then 2 lakhs into 17.5%, how much it is? 35k. Again 5 lakhs into 17.5. No, wait, second hand machinery additional you won't get, only normal. 2 lakh into 15% into 1 by 2, 15,000. Am I right? This is only normal. 5 lakh into 7.5%, 37,500. 1 lakh into 7.5%, 7,500. Am I right? In these three cases only normal depreciation, less than 180 days, therefore half rate. Next, what is the total depreciation on plant and machinery? Only plant and machinery 70,000, 1,75,000 plus 3,50,000 plus 70,000 plus 52,500 plus 15,000 plus 37,500 plus 7,500 is equal to 7,75,000 is the total depreciation on only plant and machinery. Okay, now they are asking depreciation allowable and they're also asking WDV value. How to calculate WDV? Opening plus additions minus depreciation. So 2 lakh plus 5 lakh plus 10 lakh plus 4 lakh plus 3 lakh plus 2 lakh plus 5 lakh plus 1 lakh minus 7,75,000. WDV 24 lakh 25,000. Am I right? Yes or no? What happened? 7,700. Maybe probably I might have wrongly totaled. 77,500. You got here correct only. Yeah. Our answers are correct. Only totaling is wrong. Okay. 7,77,500. Okay. Only our calculation was wrong. Okay. Yeah. So 32 lakh minus 7,77,500. Okay. 22,500. Am I right? That's it. Now building 5 lakhs, 45 lakhs. Depreciation 5 lakhs. WD value 45. Over. That's it. I think depreciation related all the problems are over. Okay. Then next question. Power sector. Power sector, the depreciation is on asset wise. Yes or no? Fine. We'll see. There is a company which is a power generating unit. On 1st April 2023, they purchased a plant of 50 lakh, which is eligible for depreciation of 15% on SLM. Compute balancing charge or terminal depreciation assuming it is sold on 21st April 2025. Now remember, it is purchased on 1st April 2023. So what is the WDV value on 31st March 2024? What is the WDV value on 1st April 2024? Tell me. So what is the value? What is the depreciation? 50 lakhs. 50 lakh. Yes or no? 50 lakh. Now 23, 24, 15%, 7 lakh 50,000. Am I right? So 1st April 2024, 42 lakh 50. Again 7.5 lakh. Am I right? Because straight line method. So 1st April 2025, what is the value? 35 lakh. Hello. Now this is sold for 7.5 lakh. Yes or no? 7.5 lakh. Then 27.5 lakh will be called as balancing charge. If the written down value of a machine which is on SLM basis is sold for lesser price, balance amount is treated as terminal depreciation. What is it actually treated as? Terminal. Balancing charge means income. So this actually this is terminal depreciation. What is it actually called as? Terminal depreciation under section 32. How much is that? 27.5 lakh. Correct? Oh, they only reduced 35 lakhs. Correct only. 7.5, 27 lakh. This is terminal depreciation. That's what 27.5 terminal. Correct? Next. So next 35 lakh, 45. Oh, 10 lakhs is balancing charge here. 10 lakhs is what? Balancing charge. Oh, C case. C case, how much is the balancing charge? 10 lakh. Case number B, 30. 5 lakhs is terminal depreciation. Correct. Case number D, 55 lakh. Oh my god. Then 15 lakh is balancing charge. 5 lakhs is short term capital gain, 50A. That's it. This is very simple. Okay, no much complication here. See, that's how they computed. Okay, next. This and all not required, ma. Leave it. Okay, then actual cost of the asset. On this also there won't be any problem to best of my knowledge. Oh, he's there. Okay, fine. We'll see this. We'll see this. 70. Okay, R purchased a house property on 1st December 2023 for 10 lakh. Till 1st December 2025, the same was self-occupied as residence. On this date, the building was brought into business purpose, medical profession. What would be depreciation for assessment? Building brought into for personal use. Actual cost, we need to add in the block actual cost. How much you will add? Explanation 5 to 43 subsection 1. Okay, we have discussed explanations in our proper regular class. Okay, EO regular, that batch we clearly discussed. Okay, now as per that, original cost minus notional depreciation for every 31st March we should reduce. Then balance will be the opening value in the current year. Okay, now you see he purchased it in 1st December 2023, which means 23-24 you should calculate notional depreciation, 24-25 notional depreciation. Then in 25-26 he brought into the block. So whatever after reducing notional depreciation, whatever value left, that value will be treated as actual cost. Okay, now look at. So cost of the building 10 lakh. Remember in 23-24 we need to calculate notional depreciation, right? But in that year it is used for less than 180 days, 1st December onwards, therefore 50, therefore 9 lakh 50. Minus for 24-25 depreciation you should calculate. So therefore WD value for the current year opening is how much? 8 lakh 55. Now in current year how much depreciation? Directly 10%. That's it. Clear? Easy. Not a big deal. Roshan started business of designing on 1st April 2024, means last year, 24-25. He acquired a laptop on 1st April for 50,000 for his business use. Since his gross total income for that year is only 55, he did not file return of income. During the year 25-26, the business income before depreciation is 5 lakh 60. Now he is required to file return of income. He seeks your advice regarding computation of depreciation. He is maintaining books of accounts from 1st April but did not provide any depreciation. Case number A. On which rate he is providing that and all doesn't matter. We calculate depreciation as per our income tax block. When he purchased laptop 50,000. So no, for 24-25 40% depreciation. How much is the depreciation? 20. So opening value for the current year how much? 30. Current year depreciation how much? 40%. Again how much? 12,000. This year profit is how much? 5 lakh 60. Minus depreciation how much? 12,000. Therefore net income in the current year how much? 5 lakh 40. Hello everyone, you're able to understand? So I'm first calculating laptop original date 24-25 40% closing value minus current year 40%. Okay, so WD value of the current year is how much? You see, WD value for the current year. Okay, they're asking only WD value as on this date. Now please compute depreciation on his behalf, assuming that he is maintaining books of accounts on 1st April but did not provide depreciation. He is maintaining books of accounts from current year. Similar only. Okay, similar only. Cost of laptop 50. Depreciation provided in the book 0. 31st March. Arre, they did wrong. For example, depreciation provided is 8. This is wrong. This is not required. Don't do this. Leave it. This calculation is completely wrong. Leave this. Okay, what we did is right. This you don't even consider. Whether you file writ of income or not doesn't matter. You calculate depreciation as per income tax rules. Okay, next. A car was purchased by S on 10th August 2021 for personal use, 3,25,000 ma. It is brought into business on 1st December 2025. When building is brought into business, what we did, explanation 5. Okay, original cost minus notional depreciation. When car is brought into when car originally bought, now I am bringing it to business. Actual cost means original cost. That's it. So what is original cost? 3,25,000. That's it. I will record at 3,25,000 in the block. In our book, it is clearly given. Explanation 5, buildings, other assets. Other assets I gave in our book also, table, actual cost minus notional depreciation, I did strike through there. Okay, fine. So 3,25,000. When the market value, this information is irrelevant. Compute the actual cost, 3,25,000. Amount of depreciation, 15% over. Are you clear? Explanation 5 is applicable only for building. Building only. It is not applicable. It is applicable only for building. It is not applicable for car. That's it. Understood? Next, 73. Compute depreciation under 32 from the following information. WD of the plant as on 1st April 10 lakh. Plant D acquired on 10th July for 5 lakh. 1 lakh has been paid in cash to the vendor and the balance amount is paid through account pay check. Only any amount paid more than 10,000 will be disallowed. It will not be allowed as capital expenditure. So only 4 lakh will be capitalized. 10 lakh plus 4 lakh. Such plant was put to use on the same day, means more than 180. So on entire 14 lakh, 15%. On entire 14 lakh, again 20% additional. So 14 lakh into 15, 4 lakh. Oh, sorry. Additional new asset is only 4 lakh. So no, into 20, 80. This is the total depreciation. Correct? Easy. We already did enough. So that's why I'm just shortcut I'm using. Clear? No? Additional depreciation only on the new machine. Again, the actual cost means what? Actual cost means actual cost. But if the asset is purchased for more than 10,000 in cash, that will not be treated as actual cost. Here 5 lakhs is the actual cost. But out of that 1 lakh is paid in cash. Remove it. So balance actual cost is 4 lakh. So only 4 lakh will be added in the block. And only on the 4 lakh additional depreciation will be claimed. That's it. You see, they gave this information. The SSA engaged in business of industry and opted for old tax regime. Optional tax regime only additional depreciation you will claim. If it is default tax regime, you will not claim additional depreciation. Correct? Whenever you are calculating depreciation, remember, is it which regime it is? Default tax or optional tax? If it is default tax, no additional depreciation. If it is optional tax, yes, you can calculate. Next. Oh, one more. Narang Textile Limited purchased a machinery from Germany, $1 lakh on 3rd September through a term loan from bank. The exchange rate at the time of acquisition was 85. The SSA took a forward exchange rate on 5th October and the rate specified in the contract was 87. So forward exchange rate is irrelevant. We always record the asset at exchange value. Okay, I mean original acquisition date exchange value. Okay, next. Compute depreciation for the assessment year. Here 43A provision is also applied. 43A, there is a section called 43A. I think you might be finding that here. 43A. Suppose if there is a change in rate of exchange during the previous year after acquiring the asset, because of that increase in liability or decrease in liability, which is at the time of payment, okay, then that payment towards the whole or part of the asset or towards repayment of the whole or part of the asset in the foreign currency for the purpose of asset, that the amount by which liability increased or decreased shall be added to the actual cost or reduced from the actual cost. At the time when the asset is acquired, 85 lakh. Yes or no? Now depreciation for that year is what? Depreciation for that year is what? 15% as usual. So opening WDV in the current year, because remember this was purchased in last year. Opening WDV, but this year what SSA did, he entered into forward contract at 87, which means he is going to settle the liability at 87 rupees. Originally he recorded at 85. Now 2 rupees extra liability is paying. Now, which means I incurred more cost, but earlier I only capitalized 85. Now I have to capitalize 87. 2 into $1 lakh, 2 lakhs I will now add it to the block. Now then my revised cost is becoming how much? 74 lakh 25. On that I will claim depreciation in the current year. So in the current year, if any exchange rate variation came, Either add it to the block or reduce it to the block before calculating depreciation. Then you reduce the depreciation. This problem we don't even have in CA, which is a good thing. Clear? You understood now? Why we didn't add this 2 lakhs in the last year? Because last year we don't have exchange rate information. We only have acquisition date. Last year settlement amount we don't know. Now I took a forward contract. So I'm going to settle the liability at forward rate. Forward contract means you know, right? It is the rate at which I will settle the liability. On the day market value can be anything, but I will settle only at 87. So which means though I originally acquired at 85, now I'm going to settle at 87. What is my actual cost? 87. Now you see 85 recorded, 2 here recorded. Total 87 is added to the block. But 2 lakhs is recorded in the current year, but not in the last year when the asset was purchased, because in the current year only we are settling the liability. As per 43A, if there is any increase in liability or reduce in liability at the time of making payment, then that amount, the amount which is increased or reduced, shall be added to or deducted from actual cost as reduced by depreciation already claimed for the last year. That's it. You understood? With this, depreciation is completely done. Then we have something called unabsorbed depreciation that is relevant here. We will be discussing unabsorbed depreciation in set off and carry forward chapter. Are you clear? That's it. Then we have site restoration. This provision is not required. There is no problem also. They will not even ask also. These provisions 33AB, 33ABA, tea development, coffee development, rubber development contribution, site restoration. There are 2 provisions which are there additionally in CMA. They are not relevant at all from exam point of view. You can ignore it. They're very tough provisions, advanced provisions which are there in final. Okay, problems also won't be there. They won't ask also. Now it is scientific research. I hope you are clear until now. Depreciation, yes or no? Now we need to solve problems on scientific research. I'll just stop the video and then record separately. Okay, yeah, let's continue. 75th question. Okay, Dynamic India Company commences production on 16th August 2025. It incurred the following expenses related to scientific research. Find deduction under section 35. Now remember, scientific research means first we must know which regime. Yes or no? Let us compute under optional tax regime. Okay. Now if it is default tax regime, contributions you will give, right? You won't get deduction. Optional tax regime, you get deduction for contribution, in-house research also, both. Yes or no? Fine. This is a company, probably. In my intention, this is company, probably. Okay. Now, amount paid to approved university for social science, yes, eligible. Purpose doesn't matter. Remember, if at all I am incurring directly, then it must be related to my business. If I am contributing to somebody, it doesn't matter. First I will identify non-business cases. This is non-business, this is non-business, but these are payments only, so no problem. Okay, that's it. Rest all are business purpose, so it doesn't matter, no problem. Okay, now, so 50,000, yes, I can claim. Paid to scientist, not employee, no deduction. Some scientist you paid who is not an employee. Suppose if it is employee, then it's a part of business expenditure. Yes or no? Paid to approved national laboratory, yes, eligible. Then purchase of land and building, cost of the land 1,50,000, but you only get deduction for 3.5 lakh. Building cost you can claim deduction. Purchase of car to carry scientific, yes, eligible. Capital expenditure including cost of the land, only 4 lakhs is eligible. Then purchase of material, yes, eligible. By the way, oh my god, they commenced production on 16th August. Scientific research expenditure incurred prior to 3 years, you can claim deduction provided the cost is expenditure is related to material and labor. Correct? Huh? Now salary other than perquisite, yes, perquisite provided. Perquisite you don't get deduction, only salary you will get. Other revenue expenditure you won't get deduction because this is in the last 3 years period. Fantastic. Purchase of capital expenditure, this is prior to 3 years, no deduction. Capital expenditure also prior 3 years, this is prior to 3 years, no. Yes or no? Now again, this is within the 3 years, no, that is also prior to 3 years again. Oh, no, sorry. 31st March 2022 they said, their information is not clear here. Is this incurred during the last 3 years? Okay, fine, I assume it is incurred in the last 3 years. Revenue, I assume it is incurred in the last 3 years. Correct? Huh? This is before 15th. This is before. No. These are incurred before 3 years. Yes or no? Now, by the way, tell me, from this point of view, 3 years means what? 17th August 2022. Yes or no? 17th to this year is 3 years. 16th or you can take. Yes or no? Then any expenditure incurred up to 15th August 2022 will be ignored. Yes or no? This incurred up to 31st March 2022, which is ignored. So now total eligible amount, how much? Calculate. 50,000 plus 60,000. Am I right? 3.5 lakh plus 2 lakh plus 4 lakh. Am I right? Plus 3 lakh plus 2 lakh. That's it. 15 lakh 60 is the answer. Oh my god, we got 15 lakh 60. They gave 15 lakh 90. Where it went wrong? Paid to scientist who is not an employee of the company. Okay, this is actually contribution. It will come. This point they considered extra. Correct? Huh? Only this point, which we didn't give deduction for that. We didn't give deduction for that. Paid to employee for business purpose. This comes under contribution technically. It's not a direct expenditure incurred. Technically, we should not claim. But they took it. Okay. Now, default tax regime. Under default tax regime, what you will not get? You will not get this. You will not get this. Rest all you will get. 15 lakh 90 answer minus 1 lakh 10,000. So 14 lakh 80 is the answer. That's it. Over. Actually, very good. Very good, Sam. Actually. Yes or no? Very good. Very deep testing of the concept. So even if you are paying to scientist, even though not an employee, but for business purpose, it is treated as direct expenditure. But technically, when you pay any amount, it is not treated as incurred. It is contribution. Contribution to some scientist. Nowhere covered. Correct? Huh? That's it. So that 30,000 rupees only, I'm skeptical because this is generally not allowed. Okay? But they didn't even give any note point also. They didn't even give note point. Fine, I'll see whether any theory point is there. Okay, I can say probably, yeah. Wait. Paid to scientist means in my business, some scientist is working. He is not employee. It's incurred only for business purpose. Correct or no? If I pay to employee salary, you are claiming deduction. He is not an employee. That's it. It doesn't matter. No. Yeah. Correct. It is incurred for the business purpose, directly spent by me because I paid to scientist honorarium or some professional fee I paid. Yeah, allowed. No, allowed. 30,000 is allowed. I was thinking it as a contribution. No. It is incurred within my R&D facility. Some scientist is working. I paid him for the fee. I paid him the fee. Allowed. 100% deduction allowed. Allowed. That's correct logic. Very good actually. Good point. That point alone is very good. That's it. Next. 76. Avishkar Enterprises purchased machinery 5 lakhs on 18th August for scientific research. So in 24-25, they might have claimed deduction, no? Entire 5 lakh, am I right? Entire 5 lakh they would have claimed deduction. Now what happened on 17th July, current year? The research work is completed. On 31st March, the machinery is sold for 1 lakh. Whatever the amount received 1 lakh, that 1 lakh is claimed as taxable amount. Yes or no? What is the tax impact? 1B taxable. 1 lakh is taxable as balancing charge. No. 1 lakh is taxable as deemed profit. 41 subsection 3. It is taxable as deemed profit under 41 subsection 3. Yes or no? Okay. Case 1 lakh. Wait. Without using for some other purpose. In that subpoint B. That answer is 1 lakh taxable. Suppose, scientific research purpose, some said we bought machine. Now it is sold for 1 lakh. But when it is sold, after adding in the block, after using the same for business purpose other than scientific, WD of the respective block is 4 lakh 80. Okay, suppose 4 lakh 80,000 block is there. Now we brought that machine into the block. When we brought an asset which is purchased for scientific research is brought into the block, actual cost is 0. Explanation 1. So block value 4.8 lakh. Now it is sold for 1 lakh. Part of a block is sold. Now the balance block is 3.8 lakh. On the depreciation 15% you will claim. That's it. This is 1B. Now you see 1A. 4 lakh 80 minus 1, 3 lakh 80, depreciation on that. This is what I told. If the asset is used for scientific research and sold directly, amount received is profit. But I use it for my normal business, then add in the block. At what price? 0. Actual cost minus deduction claim. Actual provision is actual cost minus deduction claim 5 lakhs. So 0, 0. Now it is sold from the block. Treat it as part of a block transfer. That's it. Same 7 lakhs without using it. Then if it is sold for 7 lakh, yes or no? 5 lakh is taxable as deemed profit. 5 lakh is taxable as deemed profit. The extra 2 lakhs is taxable as short-term capital gain. Suppose it is sold after using the same for business purpose, then add into block 0. Okay, 5 lakh plus add into block, sorry, 4 lakh 80. 4 lakh 80 plus add into the block 0. 4 lakh 80 minus part of a block is sold for 7 lakh. 2 lakh 20 short-term capital gain. Directly in that case, the answer is no depreciation. 2 lakh 20 directly short-term capital gain. Wonderful question. Are you? These provisions we will not solve in CA Inter. We don't have problems on this, but we have here the problems. For every typical adjustments, we have a problem here, which is very good. Next. Then 35 AD related provision. Okay. 35 AD. I think they'll ask very advanced questions even here. Oh, no questions. Thank God. Telecom license is there. Telecom license is there. 1 question, 2 question. Actually what I will tell is telecom license is not relevant for you. Okay, this provision you can ignore it in CMA intro also. It's unnecessary. Okay, very time taking. Solving is also very time taking. This is 35 ABB. We have 35 ABB. Yeah, correct. Amortization of telecom license fee. Yeah, leave it. We have another provision called 35 ABA. Spectrum. That provision also something like that is there, but I recommend you to leave this topic. Don't even touch this topic. Okay, this is one more extra provision that is there in CMA Indo. Problems are also there, but I recommend not to touch it. Okay, next. Then 35 CCA, all that. Only one problem we ignored. That one provision problems alone we ignored. Okay, now preliminary expenditure. We need to now look at preliminary expenditure. Jardin Limited is existing company which has set up a new unit. It incurs the following expenditure in connection with the new unit, expansion related. Yes or no? Preparation of project report, yes, preliminary expenditure. Market survey, yes, preliminary expenditure. Legal and other charges for issue of additional capital required for new unit, yes, preliminary expenditure. Total preliminary expenditure how much? 11 lakh. But for a company, the total preliminary expenditure cannot exceed 5% of the cost of employed, capital employed, or 5% of the cost of project, whichever is higher. First of all, project or employed, capital employed, if this is higher, into 5% is equal to 2 lakhs. So even though you spent 11 lakhs, you cannot claim more than 2 lakhs. That too, this 2 lakhs you can claim only in 5 installments. 2 lakhs divided by 5, 40,000. Over. Next. Amalgamation or demerger, capital expenditure under VRS, these are all 5 years at a time. Yes or no? Amortization expenditure of prospecting for development of minerals. Again, leave this provision, not required. Okay. We don't have problems also, but not required. Next PGBP problems. Recovery of bad debts, provision for bad debts, not required. Only problems we are solving, ma. Almost only big problems will be left. Appa. Interest expenditure, TDS provision. Oh my God. TDS provision. Details in respect of interest expenditure is given to decide the year of allowability. Okay, fine, we'll see. Okay, just 2 minutes. Yeah, next one. Fine. 81. This is regarding 40 subsection A clause 1 or 1A. Remember, 1 100% disallowance, 1A 30% disallowance. Now I want you to watch at least my marathon. If at all you forget this disallowance, okay, watch the marathon. Remember, if date of deduction in the current previous year and remittance of TDS is within the due date for filing IT return, then you will get full deduction. If deduction is not in the current year, or deduction is in current year but remittance is not within the due date for filing IT return, then again you will not get 30% deduction in case it is payment to resident. In case of non-resident, 100% you will not get deduction. Correct? Now you see. Here question, anything else is given? Oh my god, so much is there. Oh, this is provision. Okay, this what? Up to here provision only. I mean, up to here problem. Where is the answer, guys? Oh, they gave answer directly here. Fine, we'll see this block later. Okay, we'll check it out now. Now, expenditures are incurred in current year. TD is deducted in current year. You see, current year only. Yes or no? Date on which? Okay. Date on which tax is supposed to be deducted. When it is due, that's irrelevant. When it is deducted this year. When it is remitted, 7th August, which is within the due date for filing IT return. Deduction in the current year, remittance is within the due date for filing IT return. Yes or no? Much more. Therefore, 100% allowed. Then, deduction 20 July, remittance within the due date, allowed. Deduction current year, remittance within the due date, allowed. Deduction current year, remittance within the due date for filing IT return. Due date for filing IT return is 31st July 2026. So allowed. Next, resident deduction current year, remittance after due date. 31st July is the due date, but remittance is after 31st July. Therefore, 30% is disallowed. Deduction current year, remittance is again after due date. Therefore, 30% is disallowed for the current year. The same 30% will be allowed as deduction in 27-28 financial year. Yes or no? Next, deduction in current year. Yes or no? Deduction in current year, not at all deposited. This year 30% is allowed. Balance amount, we will not allow deduction at all. Next, resident. Oh, deduction. Yes. Sorry. No deduction. That's it. 30% is allowed. And even later also not deposited. Doesn't matter. Next, non-resident. Deduction current year, remittance within due date, 100% allowed. Deduction current year, remittance within due date, 100% allowed. Deduction current year, remittance within due date, 100% allowed. Non-resident, deduction current year, remittance is in next year after due date. So 100% disallowed for this year. The same 100% will be allowed in next assessment year. Over. Good question. Fantastic. You're able to recollect, ma? Huh? You watched only marathon. Marathon also you didn't watch. Then how you are able to understand? That's okay. You revised it. Fine. Then 43B. That's okay. Provision for gratuity. All this is fine. No problem. 82. Shall I? This is 43B problem. This is 43B. Now what is 43B? If any expenditure is coming under 43B, that expenditure must be paid within the due date for filing IT return. If that amount is not paid within the due date for filing IT return, this year it is disallowed. Whenever it is actually paid, in that year again you can claim deduction. Correct? Leave encashment, interest payable to bank, bonus payable to employee, interest payable to LIC loan. Okay? Yeah. Look at first payment, first payment, all are within the due date. Okay? So amount paid allowed. This is after due date not allowed. This is after due date not allowed. This is, by the way, what is this company? Limited company liable for audit. The due date is 31st October. This is within the due date allowed. This is after the due date not allowed. Am I right? So what is not allowed? The following payments as per 43B, the following payments shall be allowed. What is allowed in the current year? All the four allowed. Yes or no? Now in the next year, next assessment year, 27-28, these are all disallowed in current year, right? Automatically allowed in that years. These are allowed in the next year. For current year, it is not allowed. Amount paid is this much. These are disallowed in the current year. So in the next year, it was allowed. You see here. That's why here these are paid in 26-27, 26-27, 26-27, which means assessment year 27-28. Allowed. Clear? Next. Very good. MSME problem. Expenditure incurred on current year. Yes or no? Yeah. Amount paid on 2nd April within 15 days. So 43B does not apply. Expenditure is incurred on this much, amount paid after 15 or after 45 days, yes, applicable, disallowed. And you can claim deduction in 26, 27. You can't claim in 25, 26, which means assessment year 26, 27 you can't claim. Assessment year 27, 28 you can claim. That's why assessment year 27, 28. This one 30 June after 45 days. So for the relevant year you can't claim deduction. For the next financial year 26, 27 you can claim. 26, 27 financial year means assessment year 27, 28. 31st and 30 June. Okay, is 43B allowed? Yes. Bonus, bonus to employee does not come under 43, I mean does not come under MSME, but comes under 43B. As per 43B bonus amount, it is not linked with 15 days, 45 days MSME. It is due date for filing IT return. So therefore, in the same assessment year, it is allowed because it is paid within the due date for filing IT return. That's it. So good, no? These problems were so minor points are tested. You get very good command on provision if you solve CMA problems. Very deeper command. Then almost over. 83, correct? Huh? Can I proceed? This is partnership form. Oppa. Fine, we'll do this. Huh? Just 1 minute. Yeah, next. Can I? There's a partnership form which is engaged in trading business, correct? Huh? Turnover of the last year is 1 crore 57 lakhs, out of which 25 lakhs has been received through account pay check. Okay, current year turnover only, ma. Okay, they want to claim the following deduction. So they want to claim following deductions, ma. Salary and interest payable, which is permissible. Yeah, they can claim from turnover, correct? Huh? Salary, depreciation, cost of materials, other expenses. Okay, so total expenditure 1 crore 42 lakh 55,000. So therefore net profit is how much? 15 lakh 25,000. Correct, which they computed. Determine income of the firm assuming the taxable interest income is 90,000. What is this? Taxable interest income is 90. Okay, probably they have other sources income. Okay, long term capital gain 1 lakh 40 and the firm is eligible for 15,000 18G deduction. Okay, fine. Shall we? Presumptive taxation they're asking. There's actually a question below presumptive taxation. Yeah. So presumptive taxation. What is presumptive income? Can I put it? How much is the turnover? 1 crore 57 lakh 80,000. Am I right? How much is in account paycheck? 25 lakhs. Balancing figure 1 crore 22 lakh. No. 27 lakh. Correct? No. 157 minus 25. Yeah, 132. 1 crore 32 lakh 80,000. Am I right? On this 8% presumptive income, on this 6% presumptive income. Am I right? Okay. So 25 lakhs into 6%. 1 lakh 50,000 presumptive income. Here 1 crore 32 lakh 80,000 into 8% presumptive income. 10 lakh 62,400. When you're following presumptive taxation, no deductions you will claim. Interest paid to partner, remuneration paid to partner, nothing. Yes or no? So what is the total PGBP income? So 10 lakh 62,400 plus 1 lakh 50,000 is equal to PGBP income 12 lakh 12,400. Am I right? Now, what is the other income? Interest on long-term capital. Interest amount how much? 90,000. Long-term capital gain how much? 1 lakh 40. Yes or no? Am I right? Gross total income how much? 14 lakh 42,400. 80G deduction how much? 15,000 they gave. Yes or no? So what is the income of the firm? 14 lakh 27,400. That's it. Am I right? Huh? This is as per normal basis, ma. Yeah, as per presumptive basis 14 lakh 27,400. Correct? Huh? If they do not maintain books of accounts, but if they take normal books of accounts, as usual, this information is given. This just add it, reduce it, over. Presumptive basis we calculated. Now, if they want to go with this, then the books of accounts has to be maintained and audited because turnover is more than 1 crore. Correct? Huh? That's it. Then ADA related, AE related is given. I think on AE problem might be there. Yeah, it's okay. Fine. Shall we? I think a similar problem we have in CA intern. We solved it. A similar problem, we solved it in CA Inter already. You can easily solve this, okay? I'm not doing this. The similar exact problem is there, or else okay fine, I'll do it. Okay, now look at Sukhvinder is engaged in business of plying. On 1st April, he owns 10 trucks, out of which 6 are heavy good vehicles, 20 ton each vehicle. Remaining 4 are light good vehicle. For heavy good vehicle, per month per ton 1000 rupees. For light good vehicle, per month 7500 or part of a month. Now what happened? On 2nd May, he sold one of the heavy good vehicle and purchased light good vehicle on 6th May. Appa. The new vehicle could be however put to use. When he used it doesn't matter. How long he owned, only that matters. Now month means calendar month. Even if you are owning for one day in that month, you need to calculate income for that month fully. Now let's calculate. Okay, so look at how many heavy goods vehicles were there. How many vehicles originally? 10 on 1st April. Am I right? So no, out of that how many were heavy good vehicle? 6 vehicles. 4 vehicles were light good vehicle. Correct? Now what happened? Remember, these 6 vehicles were there in April and May fully. Correct? Okay, for 2 months. Am I right? April and May they were there. Multiplied by 20 tons, multiplied by 1000. This is multiplied by 7500 into 2 months. Only for April and May I am computing. Up to May 2nd. Literally 1st April 24 to 2nd May 2025 to 2nd May. Am I right? Now how much is the income? 6 into 2 months into 20 into 1000 is equal to 2,40,000. Don't look at that answer, look at this answer. Solving 4 into 7500 into 2 months, how much it is? 60,000. Now what happened? Now his heavy good vehicles became 5 because he sold it on 2nd May. Okay, so 2nd May 25 to 31st March 26, same vehicles will be there. Now he added one light good vehicle. Now 2nd May to 31st March, how many months? 11 months again. Okay, 5 into 11 months into 20 into 1000 rupees per ton. Am I right? 5 into 7500 into 11 months. Am I right? Look at the answer. So 5 into 11 into 20 into 1000 is equal to 11 lakhs. Correct? Now 7500 into 5 into 11. Sorry, 7500 into 5 into 11 is equal to 4 lakh 12,500. So what is the presumptive income? 2,40,000 plus 60, 11 lakh plus 6 lakh 12,000, 4 lakh 4 lakh 12,500 is equal to, so total presumptive income 7 lakh 23,500. Look at the answer. Presumptive income. Did we calculate correctly? Correct only. 5 into 7,500 into 11 months is equal to 4,12,500. Okay, 4 into 7,500 into 2 months, 60, 4,72. This is 2,40,000. This is 11 lakhs. 18,12,500. I'm sorry, I'm totaling mistake. How much is that? 18,12,500. Correct? This is correct only. 7,500 rupees, 4 vehicles into 12 months. Okay, out of light good vehicles, all the 12 months were there. But there is one more light good vehicle. Yes or no? There is one more light good vehicle which we purchased for 11 months. Correct only. These two are correctly done. So for light good vehicle, total income is 4,32,000. How much we got for light good vehicle? Correct only. 4,12,500 plus 60,000. 4,72,000 we got. Correct? Huh? Here 3,60,000 plus 82,500. 442. Hey, wait. That approach is correct. Wait. 4 vehicles, correct one. This is where we did small mistake. 4 vehicles were there throughout 12 months. Correct? 4 into 12 months into 7,500. 3,60,000. We purchased one more vehicle. Into 7,500 into 11. Yes or no? 4,42,000. From light good vehicle, the total income is 4,42,500. From heavy good vehicles, we have originally 6 vehicles. Okay, 6 vehicles only for 2 months it is there. No, let us do one thing. 5 vehicles were there throughout. Okay, I'll not do like this. Okay, sale vehicle I'll compute always separately. 5 vehicles were there throughout 11 months into 20 tons into 11 into 1000 is equal to 11 lakh, correct? Am I right? 1 vehicle is there only for 2 months. 1 into 2 into 20 into 1000 is equal to 4 lakhs. Sorry, 40,000. So total it is 11 lakh 40 plus 4 lakh 42 500 is equal to 15 lakh 82,500. I think I did somewhere computation mistake. You see here, 5 vehicles were there. Yes or no? Out of 6, 5 were there throughout 12 months, 20 ton into 1000, correct. But 1 vehicle is there only for 2 months. April and May 2nd it is sold. 20 into 1000, that's it. That logic is correct only. Some calculation mistake we did. That's it. Yeah, I think it is better. Sale vehicle, remove it. Purchase vehicle, remove it. Those two separately compute. What are the number of vehicles throughout there? Compute throughout the year. I think that's best method to solve. Next. This is computation as per presumptive taxation. Yes or no? Other business income, non-business income, 70,000 is there. That is given information only. You see, this is other income. Now, if I compute normally, 7,45,000 is the income. Yes or no? That's it. Now, if the SSE want to go with this income, not this, he must maintain books. He must get them audited. That's it. That's it. Easy, no? Ah, 40B. Shall we do one thing? We'll take some 10 minutes break and then continue. Yeah, let's look at 85th question. This is regarding partnership firm problem. Interest is allowed maximum 12% of capital. Okay, now look at case scenario A. Interest on capital as per books of accounts 20, rate of interest is 10. Even as per deed also 10 only. Remember, either 12 or deed rate, whichever is lower. Okay, now disallowed amount is nil because 10 only. Maximum 12 is permitted, no problem. B, 30,000. Rate allowed, interest paid to partner is 15, but deed says only 12, but we can only claim 12. Yes or no? So now look at how much is disallowed. Out of 30,000, this is equal to 15 into 3 is disallowed. Yes or no? 6,000 is disallowed. Am I right? 30,000, 15, deed is silent, no deduction. Entire amount is disallowed. If deed does not contain any provision for interest explicitly, you will not get deduction at all. Remember this. 30,000, deed 18% says actual amount paid 20, but you will only get 12. Okay, you paid 20, but you only get 12. 8% disallowed. 30,000 into 8 divided by 20 is equal to 12,000 disallowed. Then you paid 15, but the deed says 10. Only 10 is allowed. 5 is not allowed. 10,000. 5 by 15. 30. Paid is this much. Deed also says this much. Only 12. 18 is disallowed. So 30,000 into 18 divided by 30. 18,000 disallowed. Over. Easy. Next. Now I think full-fledged problem. Can we? Oh, this is complete partnership firm related problem. What are they asking, by the way? Compute income of the firm. Fine, we'll do it. Net profit I will start with. Okay, can I proceed? Net profit. What is the net profit? 55. 3 lakh. 3,55,500. Now debits. Debits. Bonus paid to employee allowed. Interest on loan taken allowed. Other expenses allowed. Salary to partners I will add back. First I will compute profit as per PGBP before giving interest deduction, before giving remuneration deduction. First I will add. First I will compute. Then I will give interest. Then what I will get is book profit. Then I will calculate eligible remuneration, actual remuneration. Then I will allow. Then I will get balance profit. Then I will get income of the firm. Next, look at add remuneration to partners. Tell me what is the total remuneration paid to partner? 4,88,000 plus 9,76,000. How much? 4,88,000 plus 9,76,000 is equal to 14,64,000. Am I right? Plus interest to partner. Full amount I will disallow. Later I will claim again freshly. 10,500. Am I right? Plus Depreciation, this is as per books of accounts or not, I don't know. I will allow it as books of accounts, not as per 32. Therefore, entire 40 I will add back. Am I right? Credits, gross profit, PGBP, interest on drawings. This is not income. Okay, interest on drawings. I think a firm has a right to collect interest on drawings from the partner. Interest on drawings. This is taxable in the hands of the firm as PGBP income. For the firm, it is taxable in the hands of, I think drawings, interest on drawings is not at all allowed. That also will remove it, because interest on capital net effect we will give. I think this I will reduce it, because this is not an income. Yes or no? I will reduce this. This is not an income. Papa, such a wonderful point. Minus interest on drawing. Okay, this I will remove it. Okay, because no, this is added. This is treated as income. That is neither income nor expense. Are you clear? Neither income nor expense. Now tell me, what is the answer? 3,55,500, 14,64,000 plus 10,500 plus 40,000 minus 5,000 is equal to income of the firm before interest, before remuneration deduction. Am I right? Before any dealings with partner, this is the income of the firm. Now I will claim first interest on capital. Okay, what is the treatment of interest? You will get only 12%. Yes or no? Now look at, interest is given here. Hey, no. PGBP depreciation we should reduce. First we should reduce depreciation. Wait. Minus depreciation. How much is that? 40,000. Now income of the firm. Yes or no? PGBP income of the firm before remuneration and before interest. Correct? So how much is that? 18 lakh 25,000. Am I right? Now I will claim deduction for, no, by the way, I will see during the last year firm incurred a loss of 17 lakhs, which includes unabsorbed depreciation. Fantastic. Fine, I'll consider. I'll come back to it. Interest on loan taken from the bank is yet to be paid. Third point you see means 43B. Interest on loan 45,000 disallowed. Again I have to revise. 43B. How much is disallowed? Am I right? Now I will compute income of the firm. 18,65,000. 18,65,000 plus 45,000 minus 40 is equal to 18,70,000. This is PGBP income of the firm before remuneration and interest. Am I right? Hello? Everyone? Minus. Wait, there you don't compare the answer. Until now you understood. You follow this approach. Don't follow that answer. Final answer will check. Now, minus. First I will compute income of the firm before interest, before remuneration. Minus interest to partner. We get deduction only how much more? 12%. This 10,500 is for 15. But for 12 how much? 8,400. Am I right? 10,500 divided by 15 into 12. How much it is? 8,400. Now for the purpose of computing book profit, you should reduce unabsorbed depreciation also. Okay, minus unabsorbed depreciation. How much it is? 1 lakh. Okay, now what is the book profit? 18,70,000 minus 8,400 minus 1 lakh is equal to how much is the book profit? 17,61,600. This is book profit. Book profit information, right? 17 lakh? That's wrong. That's not correct. Book profit is 17,67,600. 1 second, I'll just see the totaling here. 3,55,500 plus 14,64,000 remuneration to partners fully disallowed. 10,500 plus 40,000 minus 5,000. Huh? Yeah, here we added. Here, where is depreciation here? We didn't add here. We didn't add depreciation. 40,000 added. Array, you told me wrong, pa. Here we added 40. Here only 30 you should claim. Depreciation as per 32. 30 only, no? So 18,65,000 minus 35,000 minus 30,000 plus 45,000 is equal to 18 lakh 80. Then 18 lakh 80 minus 8,400 minus 1 lakh is equal to 17 lakh 71,600. 17 lakh 71,600. Interest on drawings how much? 5,000. What they did? I mean 17 lakh 76 answer you are getting there. Actually that point I'm not sure, because there is no provision on interest on drawings, because for the firm is it treated as income or not, we don't have any provision. I'll tell you. Interest on capital is the interest which the firm pay on the amount borrowed from the partner. Interest on drawing is an interest which partner, when they withdraw the capital, on that firm will charge. Technically these two should knock off. Am I right or not? Technically these two should knock off. The net effect will be 12% of capital. That's what I assumed. If I take an alternative assumption which they said interest on drawing is an income to the firm, then I don't have to reduce this. If at all interest on drawing is an income to the firm, if at all they take that assumption separately, then I will add it. Then I will get 70. Then I will get 17. Then I will get 85. Then I will get 17 lakh 76. This is book profit then. Able to understand? Only one assumption was wrong. Interest on drawing. What we assume is it is something I knock off with capital interest. Net interest which the firm can pay to partner is 12% of the net capital. What is net capital? Opening minus drawings is equal to net capital. That's what I assume. Able to understand? But alternatively what you can do is, if at all firm, if at all partners are withdrawing any money, on that the firm has a power to charge interest, you can take an assumption that this is irrelevant of capital, irrespective of capital. This is not linked with capital. In such a case, I can take an assumption that this is income to the firm. Already P&L it is credited, already taxed, so no treatment. That's why we did not do anything. So that is one alternative method. Okay, this is something debatable. But generally logical is what, interest on capital I pay you. Interest on drawing I charge from you. I'll knock off these two. Net interest, that I will compare with 12% of capital. Able to understand? That's actual correct method, logical method. But fine. Anyhow, 70 lakh 76 correct? Now tell me, first 6 lakhs, 5.4 lakh is the book profit. Balance 11 lakh 76,600 into 60%. How much? 11 lakh 76,600 into 60%. How much? 7 lakh 5,960. Put together. Oh, the eligible remuneration 12 lakh 45,960 coming. But if you see, the actual remuneration paid is 14 lakh 64. You get deduction only how much? 12 lakh 45,960. Only this much you will get deduction. Am I right? Now, what is the balance income? 17 lakh 76,600 plus 17 lakh 76,600 minus 12 lakh 45,960 is equal to balance income 5 lakh 30,640. Wait, this is balance income. Add back unabsorbed depreciation now, because I reduced here unabsorbed depreciation. I will add back unabsorbed depreciation now. Why am I adding back? For income computation under PGBP, I will not reduce unabsorbed depreciation at PGBP level. I will reduce at set off and carry forward level. But book profit computation purpose, I reduce unabsorbed depreciation at book profit purpose. So for book profit purpose, I reduce UDD. But for income purpose, I will add back UDD. Now income of the firm 6,30,640. Now brought forward business loss is there, brought forward depreciation is there. First I will give set off to business loss. Now if you see brought forward loss information, how much? 17 lakhs. Out of that 16 lakhs is business loss, 1 lakh is, and I will set off this. Okay, so entire 6,30,640. So balance business loss is what? Okay, 16 lakhs minus balance business loss 6,30,640. Balance business loss is 9 lakh 69,360 will be carry forwarded. Yes or no? Whereas 1 lakh unabsorbed depreciation will be again carry forwarded, because this year profits are not sufficient. Do you? That's it. Able to understand? All of you? Fantastic. Yeah, you see. Why 6,30,000 they got? We got also 6,30,000, no, because we added back. This point I told in the class. We have in CA Inter illustration, sorry, TYK number 12. This point I told. We solved it and even added a video there in PGBP. That's it. This is book profit computation. Again, income computation is something different. Book profit before adjusting UDD, 18,76,000. Now salary to partner, brought forward loss, all that. So remaining brought forward loss, sorry, unabsorbed 1 lakh will be carried forward. Remaining brought forward loss 10,16,000. I think they did wrong. Hey, wait, 10,16,000. What is this? 17 lakh, which includes unabsorbed depreciation. 17 lakhs, no. Yeah, I'll tell you why. I'll tell you, wait. Remaining business loss, remaining brought forward loss, 9,69,000. This is. It's not 10, it's 9. Because we set off 6,30,000, no, out of 16 lakhs. So remaining is 969, 360 will be carried forward. That's what I told. Correct? Huh? Here somewhere I wrote 9,69,000 will be carried forward. 1 lakh will be anyhow carry forward. But actually in the current year, in this 969, depreciation of current year, some 30,000 is there, no? Again, that will also be in this 9,69, 30,000 will be again carry forwarded as UDD. 9,39,360 is only, no, current year we have enough profit. Current year depreciation you can claim because current year we have enough profit. So current year depreciation is absorbed fully. Still we have 6,30,000 business profit. Brought forward business loss we set off. Then 969 will be the remaining business loss which will be carry forwarded. Brought forward depreciation 1 lakh. You don't have profit. Again re-carry forward. Able to understand. This is a very fantastic problem which we already did in our CA Inter also. TYK 12. Will your answer be different if brought forward loss is 20 lakh, which includes unabsorbed depreciation 2 lakhs? Unabsorbed depreciation 2 lakhs. Yeah, book profit will vary now. Now book profit will be here 17,76,000, right? Book profit will be now 16,76,000. Okay. Now book profit will be how much, ma? Wait. So net profit, correct? Huh? All these are debits, correct? Huh? 1906, correct? 18,76,000, correct? Unabsorbed to the extent that remaining book profit not less than unabsorbed depreciation allowed to the extent that the remaining book profit is not less than only 76,700. No, that's wrong. You can take entire 2 lakhs. Unabsorbed depreciation you can take entire 2 lakhs. Then you get this answer. This is something wrong. Unabsorbed is allowed to the extent that remaining book profit is not less than brought forward business loss. I think they're taking beneficial treatment. No, you should not take like that. You should not take like that. So 2 lakhs you should reduce here. Here they applied income computation logic which is wrong. Okay. Here you have to take 2 lakhs. Reduction should be 2 lakhs. Clear? Then this amount everything will change. This amount everything will change. This actually here the answer should be 2 lakhs. You should reduce 2. Then again here what you should do, you should add back again. Book profit before unabsorbed, no? Here it is correct only. That is correct only they took. Okay. This should be 2 lakhs month. This is not 76 month. This should be 2 lakh. That should be 2 lakh ma. We'll see, is there any note point why they took that kind of adjustment? I think what they did is not right. Okay. Here you should reduce 2 lakhs only, not 76. 2 lakhs only you should reduce. Understood? Which is wrong actually. Why they did like this is 18 lakhs is business loss, no? 2 lakhs is brought forward depreciation loss, no? Okay. If they keep 18 so that business loss can be set off. That's not correct. You should claim entire unabsorbed depreciation should be reduced for calculating book profit. Entire unabsorbed, all the deductions under 30 to 37 should be reduced for the purpose of calculating book profit. Even interest on capital should be reduced, maximum 12. Then you get what you get is book profit. Book profit is always a working note. That's not the main answer. Able to understand? That's it. That is something wrong. Okay. Next. Then general illustrations we have 88, 89, 90. 3 questions only. Yeah? That's it. No problem. 5 minutes. We'll do it. That book profit logic you understood? First question we did correctly. Second part of the question, 2 lakhs is the depreciation. Entire 2 has to be reduced, not 76,000. That is wrong. That's it. Yes. Let's look at general illustrations. Sunil, a practicing CA. He runs a private coaching institute. He also runs, and his bank account details are given below. He is maintaining on cash basis. Remember that. Compute is gross total income. They are asking just GTA. Now which regime they didn't tell. But anyhow, the regime doesn't matter because this is CA. Additional depreciation concept will not apply. Scientific risk contribution also may not apply mostly. Okay. So regime doesn't matter. I'll directly compute under OTR, optional tax regime. Okay. Fine. Incomes. What are the incomes? I will directly, I'll calculate under direct method. Since receipts and payment account is given, I'll directly calculate under direct method. Where incomes I will take add, expense I'll get reduce over PGBP income. Audit fee taxable. Income from professional work taxable PGBP. Coaching fee PGBP. Yes or no? Interest on investment. Other sources. Examiner fee. Other sources. Rent from house property. House property. This is rent amount. Remember. Okay. Then office expense PGBP. Municipal taxes. House property should claim. Coaching expense PGBP. Personal expense ignored. Membership fee profession only allowed PGBP. Life insurance premium ATC. Remember they are asking gross total income only, so no problem. Okay. I think here they computed total income. We'll do total income, no problem. Okay. ATC. Income tax not an expenditure. Motor car purchase, it's a capital expenditure. You can claim depreciation. Yes or no? Motor car expenses, yes, allowed. But you see 20% of the car is in respect of profession. 80% is personal. Yes or no? So only 20% is allowed. Am I right? Insurance of property, house property, any expenditure ignore. Yes or no? That's it. Over. Then outstanding fee, all that is gain. Fine. We'll see. We'll compute first like this. Okay? Can I? First PGBP income. All these three total. PGBP receipts how much? 23 lakh 1200. Am I right? So PGBP income how much? Business or profit receipt? 23 lakh 1200. Am I right? Amma? Correct? Then expenses. Office expense how much? 18,000. Am I right? Next one. Coaching expenses 800. Membership fee 500. Next. Car expenses only 20% ma. 10,200 into 20%. Am I right? 2040. Correct? Then depreciation on car 1,80,000 into 15% into 20%. 5,400. Am I right? Correct? This is depreciation on car. Next. Now depreciation allowance for motor car is 27 if wholly used for a profession, but we only use 27%. Sorry, 20%. So 5,400 we can claim. Considered. Next. Outstanding fees as on 31st March is 2,000, whereas 500 receivable from Mita is considered as bad. It doesn't matter. Bad debts doesn't matter because here we only consider this only receipts. So this is accrual information, doesn't matter. Outstanding fees of 20-23, 10,000 received during the year. This is that year fee received now, but it is cash basis. Cash basis means only receipt date is matter. Therefore this 10,000 I will add it. Yes or no? I will treat as current year income. Am I right or not? Just a minute. Just a minute. Correct? I will treat it as current year income. Correct? Office expense include payment of 2,000 incurred during the year. 24-25. Array office expense no 24-25 expenditure 2,000 is there, but it is paid this year. Which year doesn't matter. Paid this year. So therefore deduction. Correct? That's it. Over. PGBP income is over. Now what is the PGBP income? 23,12,200 minus 18,000 minus 800 minus 500 minus 2,040. Am I right? Minus 5,400 plus 10,000. 22,84,460. Correct? Did they give correct answer? PGBP income 2284 460. Correct? That's it. Then other sources income. Huh? Wait, I'll compute it. Let me compute. Other sources income 3000. Am I right? House property income. Remember, rent amount 5000 minus municipal taxes how much? 800 minus 5000 minus 800 minus 30%. House property 2940. Am I right? Now next, that's it. All the points we considered. Wait, here bad debts point is there. Recovery. No, nothing. That's it. So that's it. So what is the PGBP? What is the gross total income plus 3000 plus 2940? What is the gross total income? 22 lakh 90,400. 10,000 difference. This 10,000 they didn't consider. You see? That's wrong, no? House property is correct. PGBP income, how much PGBP? 22 lakh 74. 22 lakh 74 460. Correct? 22 lakh 74 460. This 10,000 only they are getting wrong. Some 400 also is there difference. Wait. Yeah, they mentioned. Fine. Yeah. Outstanding fee, which is included. We should not add. Yeah. Correct. 74 460. Correct? But still, we are getting some difference of 400. No? I think here totaling might be wrong. Okay. Here they gave separately. You see here. Here they gave separately. Coaching fees is there, na? This we added here, but we reduced here. As a whole, it is correct. 2280 for 400. Yeah. Correct? No? Yeah. That's it. Our answer is correct only. The 10,000 we missed because it is included already in audit fee. We forgot that. We missed it. Easy, no? Not a big deal. Next. 89. Oh, so many points. Compute business income. Thank God. Only PGBP income we should compute. Can I? Net profit. Yeah, they gave it. Now I will simply see expenses. Opening stock allowed. Okay. Then purchases allowed, salaries allowed, legal expense allowed, bad debts allowed, rent allowed, interest on loan allowed, depreciation expense allowed, income tax paid not allowed, outstanding customs duty. Customs duty is a 43B item allowed. But if it is outstanding but not yet paid within the due date for filing a return, we will disallow. So this is 43B subject. Okay, then sales taxable, profit on sale of import license, yes, 28 taxable, gift received, other sources, yes or no? Moreover, this is just 25,000, 24,000, less than 50,000, therefore it is exempted. 56 subsection to clause number 10. Then closing stock, yes, taxable in PGBP. Then other information, yeah, legal expense allowed, contribution towards URPF not allowed, general expense allowed, traveling expense allowed. That's it. Now additional information. In computing, the following facts have to be taken. Interest on loan is paid to brother for loan taken for payment of advance income tax or interest on loan. This is allowed. Sorry, disallowed. Income tax related loan. Income tax related any expenditure is disallowed. Yes or no? Next. During the year 21-22, SSC had claimed 45,000 as bad debt, out of which 35 was allowed. During the year, he recovers 25,000. Bad debts recovery. Bad debts claimed, bad debts allowed, bad debts recovered. All the three different. Okay. Now look at. I will tell you a table. So he claimed 45,000 expense, but department allowed only 35K. Probably I assume that indirectly that year how much is taxed? 10,000. Yes or no? 10,000 got taxed indirectly. He claimed 45, whereas 35,000 only it was allowed. Actually, no. How you can do? For this, I will show you our book. Easiest way. Bad debts point I will show you. You see here. Amount recovered minus X. Let us call this as X. This is X. Instead of net deduction, I will use the word X. Correct? Amount recovered how much? 25,000 we recovered. Minus X. Correct? X. Amount claimed how much? 45,000. Correct? Deduction allowed how much? 35. How much is the X value? 10,000. So 25 minus X how much? Only 15,000 is taxable. Okay. This value net deduction is there, right? You call it as X. No, even I have to, in my notes also I'm rectifying this. Let me call it as X. Okay, that's it. How much is taxable? Amount recovered minus X. What is X? Amount claimed minus deduction allowed. For that entire detailed explanation I gave in the class. I gave in total income problem topic also in our CA inter classes. Okay, that's it. So how much is taxable now? 15. How much is taxable here? 15,000 is taxable. How much is taxable here? 15,000 rupees is taxable. 41 subsection 4. Okay, that's it. Contribution to URPF was paid within the time, irrelevant. Legal expenses include 2,000 paid for income tax return, irrelevant. For preparation of income tax, still it's a personal expenditure. Income tax is always a personal expenditure. It's not business purpose. Stock is undervalued by 10. Now we need to value. So big point. Gift received was given by supplier for achieving. This is PGBP income. This is perquisite. I thought it is other sources. No, it is perquisite. PGBP income. Taxable. Yes or no? Next. Outstanding customs duties paid by after due date for filing IT return. 31st December 2026. Therefore, 43B disallowed. Yes or no? Next. During the year, he came to know that his former employee has theft cash of 5,000 rupees on 31st March 2025, which was not accounted for. Embezzlement. This is actually a loss. This is not a business expenditure. In income tax under PGBP, you get deduction only for expenses, not for the loss. Yes, no, theft and all, you won't get deduction. Therefore, I will ignore it. Am I right? Traveling expenses 50 being cost of trip to Singapore by an employee for 10 days. However, only 8 days of the trip is useful for business. 2 days has been allowed to holiday. Still business expenditure. No problem. Because employee refreshment. I give whatever my wish. My employee, he spent outside. I just paid him. It's like a leave salary. It's like a leave travel. I will allow completely. No problem at all. Rent include expenditure on extension of shed on rental building 26,000. However, such extension was completed on 1st May 2026 with a total cost of 50,000. Capital expenditure. 26,000 is only capital expenditure in that. Correct? Rent includes 26,000 capital expenditure. Am I right? But total capital expenditure spent is 50,000. Yes or no? But I think rent includes only 26,000 related to extension of the building. On the extension of shed on rented building. Correct? Extension is capital expenditure. Capital expenditure is not allowed. The 26,000 I should add back. General expenses include salary paid to domestic servant. Yeah, disallowed. 1,200 disallowed. General expenses 1,200 I should add back. Then compensation 2,000 paid for retrenchment of an employee, allowed. Employee compensation allowed. So no problem. Computers business income. All the points we considered. Very good problem actually. Now I will start net profit. What is the net profit, ma? 2,58,000. Am I right? Now look at. So here interest on here 26,000 disallowed. Correct? 26,000 disallowed because it is capital expenditure. Am I right? Next. Then 2,500 interest on loan is paid to brother for payment of income tax. So that's income tax liability. Again disallowed. How much is that? 2,500. Am I right? Then again income tax paid 2,000 disallowed. Correct? Next one 43B customs duty is not paid within the due date. Entire 25,000 disallowed. Am I right? Then contribution to URP of 5,000 disallowed. Am I right? Next general expense 1,200 related to some this one IT return preparation, salary of domestic servant. So I'll add back. Am I right? Next credits all are taxable. No problem at all. Then interest paid to broker considered during the year. Bad debts recovery 15,000 taxable. Am I right? 41 subsection 4 taxable. Bad debts recovered. Then stock is undervalued by 10%. What is it? Stock is undervalued by 10%. Opening stock I will reduce. Opening stock I will reduce. How much is the opening stock under valuation? Opening stock how much? 1,20,000. 1,20,000. This is equal to 90%. Am I right? Am I right? So it is undervalued by 10, means it is equal to 90 only. So minus 1,20,000. So I have to reduce 13,333. Am I right? 13,333 I should reduce. Now sales also undervalued. So that extra 10 you should add back. You should add it as income. Am I right? 2 lakh divided by 90%. Minus 2 lakh is equal to 22,222. Or you can do one thing. 2 lakh minus 1,20,000. Yes or no? 80,000 is the difference in stock. Divided by 90% minus difference in stock. 8,888. You can do that also. Okay, but we will do 2 lakh into divided by 90% minus 2 lakh is equal to 22,222. I need to add. Am I right? 222. Understood? Then gift received already considered, outstanding considered, embezzlement considered, traveling expense considered, rent include, yes considered, general expense considered, compensation considered, yes or no? Then is there any other related one? That's it. Come to PGBP income. Over. Now tell me. 22,222 minus 13,333. Okay, plus 15,000 plus 1,200 plus 5,000 plus 25,000 plus 2,000 plus 2,500 plus 26,000 plus 2,58,000 is equal to 3,43,589. PGBP income. Don't look at that answer. Look at this. Is this clear? Until now. Now we'll look at the answer given there. Then we will understand. 3,38,589 they said. 3,38,589. Am I right? 3,38,589. So what is the difference? 5,000. Probably that 5,000 is nothing but this one only. This 5,000 rupees here we consider no something. Former employee has embezzled, theft. Yes or no? That they claim it as business loss. But actually under 37 there are some judgments where they say theft, that's not an expenditure which is not allowed as deduction. That's how one judgment says. But here in CMA book I think they claim deduction, so you can claim it as, you can reduce it. Okay, so we'll see here what they gave. Theft, yeah, loss by embezzlement is allowed as deduction in the year in which such fact is known to the SSE. This is one case they took this option. So that 5,000 only we got the difference. Rest all of the answer correct. Yes or no? You see that 5,000. If I reduce that 5,000, I'll get the answer. I didn't reduce, no. If I reduce that, I'll get this answer. 338,518 and accurate. Able to understand? Next. Illustration 90. Wow, so much. So good actually problems were. Huh? Just 5 minutes gap. Yes. The last question in the PGBP 90. I think with this the question will be over, right? Oh, there are more ma. 90. Then we have form assessment illustration. Okay, 91 is there. 92 is there. 93. Okay, these are all only on forms. 94. That's it. We'll do it, no problem. Fatafat will do it. So what is it? 91, 90. During the 25-26, the P&L account proprietor enterprise, okay, ready-made garment shows a profit of 1,50,000 with the following information. Compute his business income. Okay, fine. I'll add it. 1,50,000. I'll directly start the problem. Okay. Net profit how much? 1,50,000. Interest on capital, add back. First I should compute income of the firm before interest, before remuneration, but after reducing all deductions, disallowances, everything. Next, purchase includes goods 12,000 from his younger brother in cash. However, market value 9. What you will disallow? 3,000. Wrong. Entire 12,000. 40A3 more than 10,000 in cash. Entire 12,000 is disallowed. Here 40A3, 40A2 both are tested. Yes or no? Next, interest paid outside India 1 lakh without deducting TDS, 100% disallowed. Yes or no? Outside India, therefore 100% disallowed. Outside India, whether you pay resident or non-resident, it doesn't matter. If it is paid outside India without TDS, 100% disallowed. Penalty paid to government for non-filing GST. Penalties are disallowed. 5,000. Yes or no? Then remember, these are all items. This shows P&L. This entirely is P&L account. I think these are all, any expense item is debited. Income items are credited. That's what I meant. Okay. Then penalty paid to customer for non-fulfilling order within the time limit. That's a penalty paid to customer. It's a normal course of business. Allowed. No treatment. Am I right? Bad debts 1 lakh. Money has been advanced for the purchase of building. This money has been paid for building purchase. Okay. This is important for capital gain purpose. Not relevant for PGBP purpose. This 1 lakh amount paid for advance. So that became, bad debts you can claim deduction only when that income is earlier shown as a sale. Now, if at all that amount is not being recoverable, then it is shown as bad debt. Here, it is not income related bad debt. It is some expense related, transaction related bad debt. So no deduction at all. But this is debited to P&L account. So therefore, I will disallow. Am I right? You're able to understand? Next. Revenue expenditure on promoting family planning among employees. It's a revenue expenditure, not a capital expenditure. Capital expenditure on family planning is allowed as deduction in 5 installments. No. Once I will see that point. Okay, capital expenditure on family planning. 36 only. Section 36. Yeah, you see. Any expenditure is incurred by the company for promoting, allowed as deduction. If the expenditure of capital the same is allowed in, yeah, correct. Revenue expenditure fully allowed. Capital expenditure on family planning is allowed as deduction in 5 installments. Revenue expenditure is fully allowed. No problem at all. Okay, it's already debited to P&L, allowed. Am I right? Premium on health of the employees. Array, one point, I have a doubt. P&L account shows profit. With the following information, compute is business income, they said. Okay, very good. My question is, whether these are all treated in P&L account or not, that is a question. I am taking assumption that if it is expense item, it is debited to P&L. Payment or expense, debited to P&L. Amount collected or receipts, something created to P&L. If it is non-PGBP item, I'll eliminate. That's what I'm assuming. Okay. Now, health paid on the employee, health insurance, premium paid on health of employee. Under 36, you can claim deduction provided it is other than cash. No, it is allowed, ma. Hey, it is allowed. Expenditure. Wait. Family planning is only for companies. Correct. Here SSE is proprietor. Very good. Yeah, 10,000. We need to add back. Family planning 10,000. We need to add back. Wow. Correct. The moment it comes to family planning, is it company SSE or non-company? We should see, because in our book it is clearly given. Company. For other SSEs, you won't get deduction. Correct. Very good. So premium paid to employee in cash. Yes or no? 6,000. Add back. Correct? Health insurance premium cash. Other than cash only allowed. Premium paid on health of his relative allowed. It's a personal expenditure. How much it is? 6,000. Yes or no? Then employer contribution to RPF 12. Half of the amount is paid after the due date under the relevant act, but before 31st July. Employer contribution due date for filing IT return, that is relevant. Correct? Allowed. Employee contribution RPF 10. Half the amount is paid after the due date. 5,000 is treated as income. 50%. 36 subsection 1 clause 5 income. Interest on late payment of profession tax 1,000 yet to be paid. Interest on late payment of profession tax. Yeah, it is allowed. It is allowed as deduction. No problem. Interest on late payment of profession tax. But actually, interest is also payable to government only, no? Interest is not yet paid, no. Any taxes and dues paid to government, indirect taxes, profession tax, everything is allowed as deduction only subject to 43B. This 1,000 rupees is interest on profession tax delay, but not yet paid. 43B is applicable. 1,000 is disallowed. Am I right? Oh, so many problems, so many points suggested. Interest on loan from SBI 10,000, 5,000 not paid till due date for filing ID return. Only 5,000 I will disallow. 43B. Correct? Interest on late refund from income tax department 500. Interest on IT refund. This other sources income, not PGBP. 500 rupees. It is credited to P&L account, so I am reducing it now. This 500 I will tax it under other sources. Next. Sales includes sale to Raja 10,000. Cost of goods is 8. Market value of the goods is 12. Doesn't matter. 40A3 is up. 40A2 is applicable only for expenses, not for revenue. 10,000 is already credited to P&L. Market value 12 doesn't matter. No treatment. he received 80,000 from a debtor at a time in cash. It's a collection. It's just a collection. Yes or no? But the question is it credited to P&L or not is the question. My doubt is this credited to P&L? I don't know. Yes or no? Fine, I think it's a sale, credit sale. I assume it's already credited to P&L, nothing wrong. Recovery of bad debt 10,000, out of which 8,000 was allowed as deduction in the earlier year. Now, earlier 8,000 was given as deduction. Yes or no? Earlier. Now 10,000 recovered. 8,000 only taxable to the extent recovered. Maximum. Okay. So 8,000 I will tax it, but P&L account 10,000 credited. But how much is taxable? 8,000. 2,000 is not taxable. I will reduce 2,000. Able to? Depreciation not being debited in books of accounts 20,000 allowed as deduction. It is not debited in accounts, ma. Okay, now I will claim it 20,000. Correct? Am I right? That's it. Compute income PGBP. Very vague. The problem. Some 2 or 3 adjustments were very vague. Okay, 1,50,000, 5,000 plus 12,000 plus 1 lakh plus 5,000 plus 1 lakh plus 10,000 plus 6,000 plus 6,000 plus 5,000 plus 1,000 plus 5,000 minus 500 is equal to 4 lakh 4,500. I don't know whether it's right or wrong. Gone. So PGBP 3,60,500. Why we are getting 44,000 difference we are getting. Fine, I will see once. 1,50,000 right. Interest on capital, yes. Add back, correct? Payment related in excess of market value. That's wrong actually. Because entire amount is paid in cash. More than 10,000 paid in cash. This entire 12,000 should be disallowed. Am I right? This they did wrong. That clearly wrong. Clearly that answer is wrong answer. So how much is the amount paid to relative? Actually 12. In cash, no, 48 is applicable. Yes or no? That 10,000. So 9,000 answer increases here by default. Am I right? So next. Interest paid outside. Yeah, correct. Penalty paid to government. Correct. Disallowed. Bad debts. Yes. Disallowed. Am I right? Bad debts we added back, no? Premium paid. Cash yellow. Disallowed. Contribution 5,000 disallowed. Interest 5,000 disallowed. Yes or no? Cost of goods sold to himself. Sale includes sale to Raja. Oh, Raj. Okay. SSA himself. Sorry. Okay. Sale includes sale to him. That's not a sale first of all. Correct? Ayyo, we missed that point. Sale includes sale to Raj. Appa, we need to remember the name also here. 10,000. Cost of goods sold is 8,000. Market value 12,000. Okay, fine. You sold 10,000. You credited to P&L. Your sale to yourself, you credited to P&L. That I will reduce. Yes or no? That's it. 12,000 I should reduce, no? Why 8,000 they debited? That's wrong, no? Or you need to consider this as other information. Yeah, correct. You see here. They reduced sale 10,000 value. Sale value they reduced to see. Cost of goods also they added back. Means entire whatever drawings were there in the goods they adjusted. Yeah, correct. That adjustment is correct. If at all here 10,000 they reduce, correct. Because 10,000 credited to P&L, but actually that's a sale to yourself, so that's not a sale. Reduce it. Now to this extent goods you withdrawn from the business, so you can't claim deduction for that. 8,000 is the cost of goods sold. Add back. So that's it. So that 2,000, the 2,000 rupees extra we need to reduce. That we did. Okay. Now because of this 2,000, this mistake we did. Next. 32 correct. This is correct. Recovery of bad debts 2,000. We also taxed how much more recovery of bad debts? 2,000. Yes or no? The 2,000 only we claimed as deduction. Correct? Everyone? That's it. Interest on late refund. Income tax 500 reduced. Correct? So how much is the answer? 3,60,500 plus 9,000 minus 2,000 is equal to 3,67,500 I'm getting. I think I did wrong totaling. Correct, no? 3,67,500 we are getting. So in our book where we did wrong? We also did not consider here, we removed it. We removed it, no? Yeah. I think you go with this answer, okay? That's it. I mean, by the way, this 9,000, this answer is wrong. Here it is wrong. Rest of the answer is right. Rest of the answer is right. Now, on only partnership form related one, they have given so many problems. On partnership form itself, they have given so many problems. We'll solve it, no problem. Okay? Yes, just 5 minutes, we'll solve this. Until now, you understood? Some remote points they tested. All everywhere, remote points. Something which we generally don't see in CA Inter. Remote points. Okay? That's it. You're able to understand? That's it. Yeah. Let's look at illustration number 91. Okay? There are 91, 92, 93. Some 4 or 5 questions were newly added in the new study material applicable for June 26 and December 26. In the old study material, these problems were not there. So please take a print of these problems and then solve. Now look at what is it? They have given P&L account. Yes or no? Compute income of the firm and allocate the income for the purpose of tax assessment for each partner. So how much income is taxable in the hands of partner? How much income is taxable in the hands of the firm? Both. So what is the net profit of the firm? Total it 2,96,000. Am I right? Just look at 1,48,000 into 2. Yeah, 2,96,000. Salaries allowed. Depreciation allowed. No, depreciation as per income tax is 17. So this I will disallow. 17 I will reduce separately. Office expense allowed. Rent allowed. Provision for bad debt. Provision not allowed. Provisions are always disallowed. Salary to A, I will add back because I have to compute book profit and then reduce it. Commission to B. Okay, commission to B is a B, any remuneration, any salary, any bonus, any name you call, paid to partner is treated as remuneration to partner, disallowed. Yes or no? Then interest, I will add back. Okay, then I will compute income of the firm first as per PGBP before interest, before remuneration. Consultancy fee, taxable. Bank interest, IFOS. So I will reduce this for PGBP purpose. Then office expense includes penalty to custom, disallowed. Depreciation as per income tax act 17, fine. First I will calculate income of the firm before interest, before remuneration. Am I? So first tell me what is the profit, net profit? 2,96,000. Am I right? Now add back depreciation as per books. How much? 20. Minus depreciation under income tax law 70. Okay, then I will have to add back interest on capital. How much it is? 68,000 plus 67,000. How much it is? 1,35,000. Am I right? Interest on capital 1,35,000 plus remuneration to partners 2,54,000. 2,54,000 plus 2,72,000 plus 9,000 is equal to 5,35,000. 5,35,000. 5,35,000. Then provision for bad debt, how much it is? 5,000 I'll add back, correct? Then depreciation I added back, this I added back. Customs 5,000 I'll add back, correct? Am I right? That's it. Now reduce bank interest for PGBP purpose. Am I right? Am I right? Now look at. So 2,96,000 plus 20,000 minus 17,000 plus 1,35,000 plus 5,35,000 plus 5,000 plus 5,000 minus 14,000. This is PGBP income of the firm before interest, before remuneration. How much? 9,65,000 minus interest on capital. Correct? 12% only. We know for 20% this much. 1,35,000 is divided by 20 into 12. How much? 81,000. Am I right? Hello? Now book profit is how much? Book profit is 8,84,000. Correct? This is book profit. Now how much remuneration is allowed? Up to 6 lakh book profit, 5.4 lakh allowed. Balance 2.84 lakh book profit at 60%. How much it is? 2,84,000 into 60%. 1,70,400. So total eligible remuneration 7,10,400 is eligible remuneration. Am I right? Yes or no? Now look at it. So here eligible remuneration. Here how much actually the firm paid? 2,54,000 plus 2,72,000 plus 9,000. The firm paid only 535. But eligible is 7,10,000. Oh, yo, firm paid less than eligible. So actual amount paid 5,35,000. You can actually claim deduction because actual amount is less than eligible amount. So income of the firm 8,84,000 plus 5,35,000. Income of the firm. sorry, 8,84,000 minus 5,35,000 is equal to 3,49,000 is the income of the firm as per PGBP. Now how much amount is taxable in the hands of each partner? Now A, B, interest, how much is taxable? 12%, 12% only. Yes or no? In the hands of A, only 12 is taxable. This is equal to 20. So 12 how much? 68,000 into 12 divided by 20. A hands 40,800 is taxable. In the hands of B, remember I gave you how much expenditure firm got deduction, that much only income for you. For them it's expenditure, for you it's income. For them 12% is expenditure, for you 12% is income. Correct? Now 67,000 into 12 divided by 20 is equal to 40,200. Am I right? Now remuneration, remember remuneration, entire remuneration paid to partner is allowed as a deduction. So whatever amount received by them is fully taxable because the firm got equal amount deduction. So A how much he got? Remuneration 2,54,000. Correct? Am I right? B how much he got? 2,81,000. Correct? That's it. So what is the income taxable? 40,800 plus 2,54,000 is equal to 2,94,800. Now 2,81,000 plus 40,200 is equal to 3,21,200. That's it. The answer over. Oh, something gone. In the hands of A, 294,800. Correct. In the hands of B, 381,200. How come? Yeah, correct only. 281. Totaling is wrong here, no? 381. Array, totaling is wrong here. We are correct only. How much it is? 321,200. Okay. Now income of the firm how much? Income of the firm how much we got? 3,49,000 we got, no? Here they are saying 3,63,000. Yeah. Okay. 3,49,000 correct. Other sources is 40. We only computed income of the firm 3,49,000 which is correct. And 40,000 you add, cross total income you will get. Total income of the firm you will get. That's it. Easy, no? That's it. You see, first time I'm solving all this problem without looking at that. Still I'm getting, because provisions clarity. Grip on application of the provision. If you are very good at applying provision, it doesn't matter whether you solve that question or not. You will solve right answer. That's it. Even wherever I did mistakes, I told you that was one is because one point Raj, that we didn't observe that. SSC name itself is Raj and SSC sell goods himself. Who will think like that? We think it's to somebody else. So that is something which is unusual. And 2 or 3 more places where I deviated from answer because they did wrong answer. Correct? Next. Fine. I think we can do this. Okay, 2 minutes. Yeah. Next, same. Okay. P&L account of the firm. Mr. PQ sharing profit and loss in the ratio of 3:2 for the year. Okay, fine. Net profit they give. Can I directly? Okay. Cost of goods sold allowed. Remuneration to employee allowed. Remuneration to partner add back. First I have to compute PGBP income as per provisions of PGBP before interest, before remuneration. Other expense allowed. Depreciation I will add back because I have to claim depreciation as per IT rules. Okay. Interest I will add back. Okay. Then sales taxable. Interest on drawings taxable. Okay. Then interest gross. This is other sources income. Long-term capital gain. This is capital gain income. I will see later. I have to reduce it while calculating PGBP income. Am I right? Next. The firm fulfills all the conditions under 18440B, so no problem. Okay. Okay. Conditions they fulfilled. Conditions they fulfill, which means they can claim deduction for interest, they can claim deduction for remuneration, but within the eligible limits. That's what the meaning. Okay. Next. Other expenses include the following: 24,000 paid in cash to supplier who refused to accept payment by check. Disallowed. Whether he refused or not doesn't matter. Donation to recognized charge balance to 6,000. Okay, this is 80G item. Political party 80 GGB. That item GGC item. Here is this SSC is a partnership form, so it's disallowed. For them 80 GGC they will get. Oh, they're asking total income and tax liability. Oh my god. So chapter 6 also we should reduce. Fine, we'll do it. Okay. First I will disallow this. Then I will again claim deduction under chapter 6A. Depreciation, yes, I will reduce this. Long term capital gain represents sale of land and compute as per H2. So 112, this is actually 112 capital gain, not 112A. Am I right? 112 capital gain. Other incomes of the partner P88, Q68. You are required to compute for the assessment year income of the firm taxability. Okay, fine, we'll do it easy only. Okay, now look at what is the net profit of the firm? 20,000. Am I right? Hello? Then I will add interest paid to partner 32,000. Interest paid to partner. Interest paid to remuneration to partner 8,40,000. Am I right? Then I will disallow depreciation as per books 10,000. Correct? And I will claim depreciation as per IT rules, which is 15,000. Correct? So this I considered. Correct? That's it. Then this I considered. This I considered. This I considered. Am I right? Then interest gross. These two I will reduce it. Correct? 24 1,52,000. Am I right? 24,000 1,52,000 I will reduce it. So then the firm fulfills all the conditions considered. Other expense include 24,000 paid to supplier, 6,000 plus 12,000. How much is that? 24,000 plus 6,000 plus 12,000. Total 42,000. But I'll add individually. Okay. 24,000 fully paid in cash, 48,300. 6,000 chartable 80G related, 80 GGC related 12,000. Am I right? 12,000, 6,000, 24. Correct? Long term capital gain considered. Yes or no? Other incomes of the partners considered. Okay, this is for partner summa. This is not there in the P&L item. Okay, then you're required to compute total income. Yes, fine. Now income of the firm. Income of the firm 20,000 plus 32,000 plus 8,40,000 plus 10,000 minus 15,000 minus 24,000 minus 1,52,000 plus 24,000 plus 6,000 plus 12,000 is equal to 7,53,000. This is before income of the firm, before interest, before remuneration. Am I right? Minus first interest at maximum 12%. So look at it, 12% how much? 32,000 is at 16% into 12% how much? 24. Clear? Yes or no? So how much is that? 24,000 interest. So therefore book profit is how much? 7,53,000 minus 24,000 is equal to 7,29,000. Now calculate eligible remuneration 7.29 lakh up to 6 lakh, 5.4 lakh. Yes or no? On balancing for 1.29 lakh into 60%. Am I right? Hello? Yes or no? 7,29,000 first 6 lakhs into 90%, 5,40,000. 1,29,000 into 60%, 77,400. To total 5,40,000 plus 77,400 is equal to how much it is? 6,17,400 only eligible. But firm paid 8,40,000. Doesn't matter. We will claim deduction only for 6,17,400. Do you agree? Yes or no? Next. So what is the income of the firm? So 7,29,000 minus 6,17,400 is equal to 1,11,600 is PGBP income of the firm. Now other sources. 24,000 interest. Remember? LTCG 1,52,000. Correct? 1,52,000. So gross total income how much? 1,52,000 plus 24,000 plus 1,11,600. Am I right? 2,87,600 is gross total income minus 80G chapter 6A payment to charitable trust. This is category 4 deduction. Category 4 only 50%. 6,000 into 50%. By the way, it is paid by check or not? Just check it out once. Nothing is given. I assume it is paid by check. So 3,000 I will get deduction under 80G. Then 80 GGC I will get deduction of around 12,000 again. Yes or no? Yes or no? Here when you are claiming chapter 6A, because it is category 4 donation, you need to calculate ATA, adjusted total income. But doesn't matter. Here it is there. Limit is there so much. It's very small amount they paid. So I didn't compute and directly did that. 2,87,600 minus 3,000 minus 12,000 is equal to how much it is? 2,72,600 is the income of the firm. Do you agree? Yes or no? Now what is the tax liability? LTCG how much it is? 1,52,000. Correct? Balancing figure is taxable at 30%. 2,72,600 minus 1,52,000 is equal to balance income of the firm is 1,20,600. For the firms, the tax rate is 30%, not basic exemption. This is taxable at 12.5%. Yes or no? Into 30% is equal to 36,180 is equal to 1,50,000 into 12.5% is equal to 19,000. You're able to follow. So total basic tax 19,000 plus 36,180 is equal to 55,180 plus 4% cess 57,390. That's it. Look at the answer. Perfect. 57,390 nearest. Yes or no? Total income 2,72,600. You see? Clear? You understood? That's it. Then illustration number 93. Just a minute. Yeah. You see, 93, 94 are absolutely easy problems. There is no additional point beyond whatever we covered till now. And I'm telling you, both the 93, 94 also firm problems only, not required technically. You don't have to solve. If you understand till now whatever we solved for firms, unabsorbed depreciation, all the points, interest on drawings, all the points until now, we did almost 4 or 5 problems. If you understood this, more than enough. This 93, 94, you just do it for self practice. Just 2 problems. Do it for self practice. No new logic. Everything we covered. Correct? That's it. I'll do one thing. I'll not solve it. I'll just explain the problem. Do one thing. I'll just explain the problem. I'll not solve it. There is a firm comprising 2 partners sharing profit or loss in the ratio of 2:1. You know, net profit. Start with net profit. Add back capital. Add this one. Office rent allowed. Staff salary allowed. Professional fee taxable. Dividend income other sources. Interest on IT refund other sources. So we should reduce this. Correct? Then office rent includes 24,000 paid to Arjun for premises owned by him. Okay, office rent is paid to Arjun for a premises which is owned by him. The fair market value is rent is similar, therefore allowed, no problem. Then staff salary include bonus of 15,000 paid to employee which was due on 31st March but paid on 1st December. 43B disallowed. Bonus, leave encashment, they're disallowed. Bonus or commission disallowed. 43B item disallowed because it is paid after due date for filing IT return. Yes, next. Just a minute. Yeah, next. Depreciation allowable as per IT Act 40. In the P&L nothing is debited, so I will freshly claim it. Over. So then I'll get income before remuneration, before interest. Now then interest at 12%. Then you get book profit. Then apply 6 lakhs balancing figure. Logic. And then compare with actual remuneration. Then whichever is lower, that you reduce. Then balance is income of the firm, which is taxable at 30%. Other source income add. That's it. Then total income you will get. Tax it. Easy. It's very easy problem. Then here, net profit. Start with net profit. COGS allowed. Salary to partners add back. Interest on capital add back. Actually here interest on capital you need not add back because you can directly come to book profit, but still add back, no problem. Okay. Donation, it's an 80G item. Sorry, donation to political party 80GGC item. Okay. Municipal taxes for the shop, house property related one. Okay. House, shop, no. Shop is actually business purpose, so allowed as deduction. No problem. Sales taxable. LTCG reduce it. Yes or no? Sale of plot, which means 112. Dividend income. Okay, so other sources reduce it. Partner share profit equally. Salaries paid only to working partners. Neo is a sleeping partner. Okay, salary to partners 6,50,000. Only working partners it was paid. No problem. The donation was made by check. Okay, 80 GGC you can claim deduction. No problem. LTCG. Okay, fine. Easy. Not a big deal. So first compute income of the firm before interest, before remuneration. Then interest at 10% only. Reduce it. Then you get book profit 6 lakhs. Split it and then compute eligible remuneration. Compare with actual one. Reduce it. Then you get income of the firm plus capital gain plus other sources income, gross total income minus 80G political party 80GGC deduction, you claim it, you get total income on that 30%. Wait, total income split it again. Long term capital gain balancing figure 30%, long term capital gain 12.5%. That's it. Total it plus 4% cess. Over. Clear? 4% cess 12.5. Here information about cost of acquisition is not given. That is only for 112A. This is 112 capital gain. 112A listed equity share, equity oriented mutual fund, business trust unit. For that 1,25,000 basic exemption is there. Be careful. This is 112. Previous problem also 112 only. It's not 112A. That's it. That's why I have given information. Plot. Okay. That's it. Successfully we completed all the PGBP problems with the provision discussion slightly. Correct? Fine. In the next session we'll start with capital gains. Clear on all of you? Yes.